Perfect. So, yo, what is up for y'all on the YouTube replay? I hope you are having a great Sunday. Go ahead and, if you want, skip 10 minutes into the stream because that's when the stock market opens. So we'll be seeing how the SPY's doing. Is it up or down? So yeah, let me give you a quick portfolio update. This is my dividend growth portfolio. So every stock in here actually pays a dividend. And here's my total percent change in every stock. So luckily we are up on every stock in here. My largest holdings are at the top. So my largest holding is ticker symbol CEG, Constellation Energy, and year to date we're up 15%, and for the past year we are up 18%, so not too shabby. Also, we have our Roth IRA. I'm about to deposit a lot of money into my Roth IRA. I'm looking to buy this one stock, ticker symbol IRM, Iron Mountain. That's going to be my newest addition to that portfolio. Also, here's everyone's favorite, my Webull growth account. So these are a lot of the riskier names like Reddit, Robinhood, SoFi, AMD, Supermicro, Power Solutions, and a lot of popular stocks. I really like this portfolio. All time in here, we are up 17% year to date, not too shabby. And then finally, we have our buy and hold portfolio. So this is my Moomoo portfolio, and once I buy a stock in here, I try not to ever sell it. I try and just hold it on for the long run, and these are all the stocks that I've chosen in here. Hope you have a good stream. I got to leave for some homework, but I'll drop in. Hey, thanks so much, Plasma. Hope you're having a great Sunday. Good luck with your homework, man. I just finished a test too. So what's up, Bob? He said Coreweave stock. Yeah, we'll look at Coreweave. We'll pull up Duolingo. Yeah, Duolingo's a cool one. So how much is the fee on Webull? Hey, I think there is no fee, Lloyd. They're both the same pretty much. The zero fees. But anyway, if I pull up the, the NVIDIA portfolio right here, their largest holding is in Coreweave stock. And let me tell you what I really like about Coreweave. First off, wonder if there's any news. No real news here. But anyway, here's what I like the most about Coreweave. It's specifically how growthy the business is. Like if we look at the revenue, the revenue was 1 year ago, $395 million. Now it's 1.2 billion. That's a 3x increase. And this was a record, 1.21 billion. The analysts are expecting the revenue to continue to climb up. So I really like the growth on Coreweave. But one thing that does kind of scare me are these huge net income losses. They're losing a couple $100 million a quarter. So that's one thing I would be careful of. One stock that's like a smaller version of Coreweave that I've seen is like a really cool stock with good financials is IREN, Iris Energy. And this one's done pretty amazing. So, but anyway, yeah, Coreweave's pretty interesting. Really growthy. So, where do you see this? Oh, or if you want to get this software I'm on, it's in the link tree in my bio, the first link there. But here's Duolingo. This is one of my favorite stocks out there that I think is a pretty good deal right now. Not financial advice. Let me give you a quick pitch for this stock right here. This is that language learning app. If anyone's heard of Duolingo before, they're publicly traded. And check this out. They're mainly a subscription model company. If you don't pay for their subscription, you're seeing a bunch of ads on their app. And look at the growth. I mean, this is the ridiculous part. This is what I love about Duolingo and why I think they're a good investment, not financial advice. Like the subscription revenue just hits a record every year, every quarter. Like it just hits a record every quarter. So it's ridiculous growth on the subscription revenue. And if we go to their advertising revenue, the advertising revenue is up 55% year over year. So both segments are growing very nicely. Sorry, I'm drinking my water here. And it's not just the revenue. The revenue is super growthy. Revenue's up 41%, but also the net income. They made 44 mil of net income, up 83% year over year. So that means they're expanding margins. Great news. Record margins, 17%. Free cash flow is up 60% year over year. So Duolingo looks like a nice growth company. They're just really growthy. Like way more, like surprisingly good financials in my opinion. My boy grabbed some Sprouts because of you. Hey, you know what? Let's check out Sprouts Farmers Market. This is a stock that I believe is at a pretty good valuation because if we look at the stock market, like the QQQ, the S&P 500, both are at an all-time high. Like literally on Friday, they both closed at an all-time high. But here's a stock that, isn't at an all-time high and looks like actually reasonable. So let me tell you, I do own them, so I might be biased when I go over them. But Sprouts Farmers Market is like a healthy grocery store. You buy like fresh produce there, perishables, but this is what I love is specifically how growthy they are. Like they have abnormally high margins for the industry. Like if you look at the revenue is up by 17. So revenue's up 17, but net income is up by 40. that means they're expanding margins. This is crazy. They legit have 6, 8% margins. This is insane for a grocery store. Like Kroger has less than 2% net margin. So because they're like a healthy oriented business, a healthy grocery store, I think that's given them a lot of pricing power than their competitors. So yeah, also they have a huge share buyback program. Like the net income is up by 40%, but the net income per share is up by 43.6%. So you own 3.3% more of the company than you did a year ago. That makes up for the lack of a dividend. They're like the only grocery store that doesn't pay a dividend. Like Costco, Walmart, Kroger, Target, they all pay a dividend, but Sprouts Farmers Market doesn't, and that's why I think they might have more growth. They're doing a lot of share buybacks. Hey, what up, William? I'm sure everyone likes him as well. Check out BMRN. What is BMRN? Let's check it out. So this is Biomarin Pharmaceuticals. So unfortunately, it looks like this stock is at an all-time low. They're also on my watch list, so there must have been something I liked. Let me see. So they're a $10 billion market cap. So that's actually a pretty big company. So they sell a bunch of prescriptions here like Voxzogo. Yeah, this one's growing very nicely. Look at that. It's at a record up 21% year over year after growing 60. So that prescription's growing. They have Vimizin, whatever that is. It's also at a record this quarter. So it looks like they sell a bunch of different prescriptions. So they're a pharmaceutical company. The revenue is up 15% and the net income is up 125%. That's crazy, yo. They're making easily 100 to 200 million of after-tax net income a quarter, and they have an absolute monster balance sheet. So they have no debt, it looks like. How much cash do they got? $1.43 billion of cash, no debt. Insane cash flow. So you know what? I really like this one, William. I wonder why they're at an all-time low. That seems very strange. These numbers look great. Like the business financially looks great. That's weird. All right. So, oh yeah, the market opens in 3 minutes. So in 3 minutes, we'll see how the market opens. So we'll see if the S&P 500 wants to hit a new all-time high. So what up, Eric? He said MANU stock. This is Manchester United. I think this is like a football company or like a club or something. So here's Manchester United. Unfortunately, the stock has not done too well. It's the same price that it was back in 2012. So you bought the stock a decade ago. It's kind of the same price that it is today. Operation of professional football clubs. So yeah, they're a football club company. The revenue's up 20. Maybe as we go into football season, this could be a nice play. But these net income numbers look so choppy. Like they're losing net income pretty much every quarter. The revenue did grow 20% year over year, so that's decent at least. But yeah, and nothing's really blowing me away here. I'd be careful with that company. So, all right, what app is website? What app is that website? Or yeah, if you want to get this app I'm on, I'm actually on a brokerage where you buy stocks. If you want to get this app I'm on, it's in the link tree in my bio. The first link there, my favorite one. So, hey, what up, John? He said Opendoor. We'll look at Opendoor, and then after this, we'll see how the market opens. The market opens in less than 2 minutes, and then I'll show you how my portfolio is doing. So here's Opendoor Technologies. This is a super momentum company right now. Basically, this stock is rallying on the chance of an interest rate cut later this month. So if we go back to, this is a super interest rate sensitive company. They flip houses, and if you look at what happened in 2022 when interest rates were zero, these growth rates were ridiculous. They were making 4 to 5 billion of revenue a quarter. But look what happened as rates hiked up, as we got 4 or 5% rates, the sales plummeted. It fell 69, 70% year over year, and it's kind of just been flat ever since. But because they're so interest rate sensitive, that's why they're rallying, because there's a 90% chance we're going to get an interest rate cut this month. So that one's super momentum. I'd be very careful. They're definitely that's not a stock you really just want to buy and hold. You really just want to, if you want that one, you trade it. But I'd be super careful with that one. Really volatile. All right, so how's market opening on a Sunday? Yeah, the overnight market opens. I'll show you in less than 1 minute when it opens. You know what? We got time for one more stock. Which one should we do here? What up, Jace? He said Symbotic. Yo, this is one of the, if you are looking for a robotics company, I saw someone say Richtech Robotics. So instead of Richtech Robotics, I would always rather buy a Symbotic than a Richtech Robotics. I've looked at both heavily, and Symbotic looks like a great company, not financial advice. They're a warehouse robotics company. They have over 1,500 patents, and their largest customer is Walmart. And Walmart likes him so much that they took a huge stake into the company. So Walmart owns 13.5% of this entire company, and they're extremely growthy. Like if we look at Richtech Robotics, they're a revenue-less company, but this one has real revenue, 500 mil plus a quarter. It's super growthy. They're barely losing any net income. So actually, out of all the robotics companies, I really like Symbotic, and Amazon is my favorite one. But yeah, look at how the analysts were expecting 553 mil. They reported 592. So yeah, nice revenue beats. All right, so wait, really? I didn't know about this. ROBO is a robotics ETF. So this looks like a fund. Let's see what its top holdings are. Celtic Investment. Oh, and then Symbiotic. Hey, like I said, Symbiotic's the second largest holding in here. Umbrella. Huh. Delta Electronics. Some of these I can't click on. Anyway, that's pretty interesting. You know what? I'll put them on the watch list. There's your robotics companies. So actually, the market just opened. Here's what I mean by that. If we go to the 1 day here, yep. Again, what the plus 28%? Oh, that's because I just sold it. Okay, never mind. Ignore that. I wish. But anyway, let's see how the market just opened. Or actually, let me look at the Qs down here. So yeah, again, it just opened less than 60 seconds ago. So there's no volume and there's barely anything here. But yeah, it's up. At least it's green. It's up 0.02%. We were at an all-time high on Friday. So any green is honestly good news. We'll come back in a couple minutes there and check that out again. So can we buy Bitcoin using this platform? Absolutely. Yeah, you can. There's a lot of crypto you can buy on here. But yeah, crypto is available on this app that I'm on. I'm on a brokerage right here. All right. So, someone said, should I just short it? How? I don't know. Hey, what up, Joel? How's it going? How's it going, John? Option trade expiring Friday. Which stocks do you think are going to shoot up? Yo, I have no idea. If I knew a stock that was going to rally up, I'd buy them. All right, so TOL I think will be good with the interest rate cut. So yeah, this is a home builder, and I believe Warren Buffett just bought some Toll Brothers, or no, he bought D.R. Horton and Lennar. I don't think he bought Toll Brothers, but this is basically the exact same thing. And yeah, you're right. This stock has been rallying the past couple months, on the hype of an interest rate cut, because this is a home builder. The home builders are pretty interest rate sensitive, and when we look at their right now financials, they're not going to look too good. The net income's down 1% year over year, but that's because rates are so high. And the stock market is so forward looking. But one thing I love about Toll Brothers and all the home builders is that they trade at low valuations, you get good yields, and they have low payout ratios. They have crazy buybacks. So you get a 0.6% dividend yield, but look how much room they have to raise it. The payout ratio is legit a 6%. And the dividend raises every year. The dividend has doubled since 2020, or more than doubled. So anyway, here's how you can also check the dividend payout ratio. So they made $369 million of net income this quarter, $369 million, and the dividend only cost $24 million. They could pay for the entire year of dividends just in this one quarter. And since they have so much leftover money, what are they doing with it? Well, they're deploying it all in share buybacks. They're just buying back their own stocks as it's undervalued. So that's how, watch this. The net income fell by 1.33, but the net income per share is actually up by 3.6. That's the power of the stock buybacks. That's what's cool about Toll Brothers. Oh, yeah, actually, let me check the Webull account. Yeah, the market's opened over here as well. I forgot. So let's see here. All right, so UiPath, Futu, looks like a little bit of green. Any red? Not really any red. Okay, great. All right, so yeah, no problem, big. All right, so someone said NVO, that's Novo Nordisk. This is the company that actually owns Ozempic. So if you've heard of Ozempic before, it's that weight loss injection that Elon Musk is on Ozempic. They also own Wegovy. This is basically a pure weight loss prescription play, because check this out. 93% of their business comes from their diabetes and obesity care products, and they print money. I mean, this is in USD. They're a European company, but we've converted it to USD. They're making over $4 billion of after-tax net income a quarter. And if you look at the yield, you get a 3.3% dividend yield. So I love the valuation here. They're trading at 14 times net income. But one reason why they've really been trading down from their peak is because they lose their exclusivity for Ozempic for their weight loss prescription in 2 years, basically 2 or 3 years. And they've seen some increased competition from Eli Lilly, but I do like them. I think that's mostly priced in. Yo, LeBron James said, what app is this? Yeah, hey, again, I'm on a broker right here. It's where you buy stocks on. So it's a brokerage. If you want to get it, it's in the link tree in my bio, the very first link there. It's my favorite one, lowest fee. Someone said, if you had disposable income to invest, where would you put it? That's the great question because I have a lot of idle cash. I have $1,000 of cash right now. To be honest with you, there's not a lot of great deals out there. But the few companies I do like it right now's valuation is actually Sprouts Farmers Market, ticker symbol SFM. That is a healthy grocery store. I do own them. I am barely up on them. I'm up 0.48% on Sprouts Farmers Market. Also Progressive Corp, ticker symbol PGR, Progressive. That blue line is where I bought my shares at. I think that one's also at a decent valuation. All right, so let's keep going here. Hey, what up, Joy? How's it going? Matthew said, check HWM. Is that Howmet Aerospace or yeah? So this is a fantastic aerospace company that just expands their margins. Like you won't believe the growth here. This company deserves to be at all-time highs. So check this out right here. Here's what's pretty cool. They sell engine products, fastening systems. But this is the main point here. Check out the revenue. The revenue is up 9%. So pretty good growth. Revenue is up 9, but the net income is up by 53. You won't believe this. The margin went from a 14% to a 20. That's a crazy 40% growth in the net margin. So that's really why Howmet Aerospace has just been monster rallying up. They deserve it. You also get a small dividend, but it grows tremendously fast, a 0.2% dividend yield. So yeah, great aerospace company, but the valuation might be a little high here. Hey, what up, George? He says NTNX. What's that one? I don't think I've heard of this one before. So Nutanix. Okay, so a $21 billion market cap. The stock is pretty close to all-time highs if I kind of zoom out on the monthly there. So not too far off all-time highs. They sell products. Product revenue is growing very nicely, up 35% year over year. Support revenue also is at a record this quarter. So both businesses are at a record. Revenue is up 19 and their net income positive. So they're making net income every quarter, 30 to 60 million. They do have more liabilities than assets. So I do wonder what's that about. They put no dividend, but that makes sense. What's the PE? The PE is, you would really want to look at a forward PE on this company. So they're just now getting profitable. So it looks like the growth is expected to keep on growing. It's 650, it's supposed to be 750. Net income is expected to continue to climb up to 30 cents. So the net income is supposed to 3x. So yeah, you really look at a forward PE on that company. Anyway, they're interesting. What is this name of the app you're on? Yeah, hey, I'm actually on a brokerage right here. If you want to get this app I'm on, it's in the link tree in my bio. It's the very first link there. It's where you buy stocks on. It's just a brokerage called Moomoo. So anyway, let's see. What up, Paul? He said, where are you at? I'm at my house. What's up, dude? I have a gut feeling. What up, Eric? He says, OPTX is going to run tomorrow. OPTX is going to run tomorrow. So this is Syntech Optics Holdings. So yeah, we don't really cover these kind of stocks. They're only a $61 million company. So do beware, that is an extremely tiny market cap. Do they have sales? They have sales of 7 million. They're not, they lost 13,000. The numbers just, it's just hard to trust these really, really small companies. The whole thing's only worth 60 million. They have, barely any revenue and stuff. So that's one thing I would be careful with. And TikTok just took down my live stream. You know what? That is okay. Well, actually, I can just switch accounts really quick. Oh my goodness, am I really not logged into my second account? That's actually not good. Give me 1 second here. If you got a stock in the YouTube chat, I will for sure cover it. Let me get my other. Okay. Actually, let me pull up Robinhood real quick. The market is open right now, so actually that could be something interesting to look at. Looks like we slightly went down. Actually, not the end of the world. The QQQ is down 0.1% right now. So here's how the market is doing right now. All right, boom. It says open the Gmail. See, I got to go to my Gmail and verify the correct number. So it'll be just 10 more seconds. Yes, it's me. Okay, there we go. Perfect. Okay, I'm about to start up the stream again. Forgive me. Oh, yeah, we'll look at Sezl, Sezl. Oh, there we go. Do you know an ETF that follows the Congress members' buy-in trades? I actually do not, But one way, actually, here's kind of an ETF, and you can follow this right here. If you're someone said, how do you check the Super Investor Congress? Like here's Nancy Pelosi, for example. You can see her exact like portfolio performance versus the index with this app right here. And you can see her exact trades and everything. Okay, boom. The stream just started on TikTok. All right. I'm streaming on my second account. So, hey, for everyone on the YouTube stream, I do really appreciate that. Yeah, Plasma, RIP the TikTok stream. Yeah, I haven't had it taken down in a while. But anyway, let's keep going here. So, I don't really know any ETFs that do that except for this over here. So, let's look at Sezl right here. This is actually a fintech. They're kind of like a competitor to ticker symbol Dave. You know what? Before the TikTok stream ended, someone commented, look at ticker symbol Dave. And this is a really cool company. They're just like ticker symbol Sezl. So let's actually cover Sezl really quickly. Here is what I really like. Someone said, how is the market open right now? So yeah, the market is open in the overnight market, and that's available on here too. So if I wanted to, like right now, I could buy a bunch of SoFi, or I could sell all my shares of SoFi right now if I wanted to. It's the market technically opens at 9:30, but the overnight market lets you still, trade in the overnight market. No options, just shares. But anyway, here's Sezl. This is a fintech I really, really like as a stock. And they're finally at a decent, price after that huge gap down. And check this out right here. This is the best part about the stock. They're extremely growthy. The revenue's up 76% after going 60, after going 34. So, just a year ago, just a couple years ago, they were only doing 30, 40 mil a quarter. Now it's almost 100 million every quarter. It's going to be. So out of this 98 million of revenue that they did, 27 million of it was after-tax net income. And this wasn't like there was a one-time adjustment. It says it's down 7% year over year. It's actually up. The same time last year, they had an adjustment. So anyway, the margins are incredibly good. They had a 28% net margin. Again, ignore this 153% quarter. But, they're doing 20 to 30 to 40% net margins. It's ridiculous. So everything about Sezl, honestly, is heading in the right direction. Deleveraging, like if you look at this ratio, the liabilities used to be 76% of the assets. Now it's only 62. So that's great news. Yeah, I really like Sezl. They're kind of a competitor to ticker symbol Dave. Hey, SoFi's doing pretty good. SoFi's up 1.5% right here. I found it. It's ticker symbol NANC. Oh, wait, really? NANC, Unusual Whales Submersive Trading ETF. Let's see what its top holdings are. So it's NVIDIA, Microsoft, Amazon, Google, Apple, Salesforce, AORT. I haven't heard of that company before. Anyway, yeah, again, with these super investors, we can also see them over here, like Warren Buffett, the NVIDIA portfolio, Soros Holdings. I wonder what he owns. Ranpak, VeriSign, KC General Stores. That stock is moving like NVIDIA. Can you believe this boring grocery store, KC General Stores? Look at that stock right there. Pretty insane. So anyway, what do I want to look at here? Oh yeah, NANC. That was pretty interesting. They own a lot of the Nancy Pelosi stocks. Sezl just looks like Coreweave to me. Already up 30% last week. I feel like most stocks. Oh yeah, Sezl looks like a growth stock to just buy and hold for the long run, in my opinion. Yo, what up, Steve? He said SNOA. Someone said, my brother, you're still live. No, hey, Cruz, we just started the stream 20 minutes ago. So no, we've done 2 different streams today. Yeah, by the way, if you want to hit the follow button, we go live every day, sometimes twice a day. So hey, what up, Happy Nuggets? What's up? So this is a $7 million company. I'd be very careful with this market cap. Like if you look in the top right, this whole company is only worth $7 million. So that's an extremely small market cap. Like it's just hard to trust that it's just hard to trust this kind of business with your hard-earned money. And look at the revenue. The revenue is only $4 million. It's up 18% year over year, but $4 million of revenue. They're losing $1 million of net income a quarter. To be honest with you, nothing's really blowing me away there. That one looks really risky. All right, so yeah, but yo, good to see you, Cruz. I hope you're having a great Sunday. It's crazy because APH hasn't gone down ever in the last 25 years. Yo, Amphenol Group, yeah, this stock right here has been on an absolute tear. I got into this stock this year, But yeah, Amphenol Group, this is the company that right now is supplying NVIDIA their copper cables, but that's just one little part of their business that's really growthy. So Amphenol Group has these three main businesses: their communication solutions, their harsh environment solutions, like that one's at a record. As you can see, the blue line, it's at a record. Their communication solutions is also at a record. Like this is the part. This is why this company deserves to be at an all-time high. You won't believe it, and I'm looking to buy more of this stock. So if we look at the revenue is up 56% year over year. That's incredible. The revenue is up 56, and the net income is up 108. That's incredible. That means they're expanding their margins. They have a record 20% margin this quarter, basically. The FCF, which stands for free cash flow, is also at a record over $1 billion for the first time ever. So everything in this company is headed in the right direction. If we go to the cash from investing activities, they're just plowing money into investments. I love this. So they're extremely growthy. They deserve to be at all-time highs, and I wouldn't be shocked to see them, continue to grind higher. All right, so let's see. Any unknown cloud plays you know of? Not really. Google's my main cloud play, Amazon Web Services, AWS, but those aren't really, those are pretty known. Not off the top of my head. I can't think of any underrated cloud companies. So here's someone said SCRV, Serve Robotics. So out of all the robotics companies out there, I would be very careful with the Serve because if you're just looking to buy and hold forever a robotics company, it's hard to trust, in my opinion, Serve Robotics. Like if you look in the top right, they're only a $700 million company. And they just IPO'd not that long ago. But they're a $700 million company. And in the sales this quarter were 600,000. Like that's so tiny. Just a very small company, And if we go to the net income, they lost 20 mil this quarter, 13 mil. So they've lost, 20, they've lost 50 million in net income, and the whole company's worth 700 mil. That's pretty significant. Luckily, they have a good balance sheet, no debt, lots of cash, but they've gotten all this cash from diluting you. If this number is positive, the cash and financing activities, this either means one of two things. They're diluting you, or they're diluting you by issuing shares or issuing debt, and the debt has stayed the same. Oh, actually, super interesting here. Uber Technologies owns 8% of the entire shares. So Uber's a shareholder here. That's pretty interesting. Maybe they have something there. Maybe they have some IP or patents or something they like. I don't know. Great Sunday. Eagles won. How was your weekend? Hey, that's great, Cruz. Yeah, hey, thanks, man. My weekend's been good too. Wait, you can access those metrics. Yeah, you can access those metrics. Yeah, you can see like all the super investors portfolio. Pretty cool here. But anyway, let's see here. Someone said, I heard EOSE is a play this week. All right, let's see. EOSE. And hey, what's up? Nobody. And Ryan said RCAT. Hey, we got to check out RCAT. They're a cool drone company. Their most recent drone just got NATO approval, which is pretty cool. But anyway, here's EOS Energy. They're a $2.3 billion company. Yeah, this chart looks beautiful. They closed at a new, basically multi-year high. Let's see what they do. So they sell product revenue. Yeah, the product revenue just popped off at a record this quarter. Yeah, look at that. Revenue went from 900,000 to 15 million. Are analysts expecting? Yeah, and the analysts are expecting crazy growth. You'll be very careful for the next 2 quarters. It should be very volatile. Analysts are expecting 40 mil and then 81 million. So the future growth expected here on EOSE kind of explains why the stock has rallied up so much. That one is really interesting. Wow, that's crazy growth expected. 81 mil. All right, so watch out for that. Nice. So let's see here. RCAT, let's do it. RCAT. So this is Red Cat Drone company. So if we look at their weekly news right here, number 1, it says Red Cat new Black Widow drone system secures NATO approval, so they can sell their new drone to other NATO members, which is pretty interesting. And look what the analysts are expecting here. It's another company. The reason the stock has rallied up so much is because of the future expectations. They only did 3 million of revenue this quarter. That's pretty bad. It's down year over year. So they only did 3 mil of revenue this quarter. But you look at the analyst expectations and look at the growth. They expected to go from 3 mil to 44 mil. So the next 6 months on this company as well are super crucial for Red Cat. So yeah, that's one of your drone plays. How do I view the Nancy investments? Yeah, hey, you just go to the Discover tab and then Insights, and you can see, or you have to get the, I'm on a brokerage right here. If you want to get this brokerage I'm on, it's in the link tree in my bio, that very first link there. It's my favorite one, lowest fee brokerage. But yeah, you can view all the like super investors portfolio, and you can like batch trade, follow them and everything. But yeah, these are basically super investors that have to make all their trades public by SEC law. So we can see it. Yeah, no problem, Chrissy. So let's see. Someone said, yeah, what up, X Dank? And Joe said BLSH. Yeah, that's that recent IPO. So this is Bullish. They IPO'd a couple days ago. What we've seen with a lot of IPOs is they initially rally up, like they went from 70 to 120, but then they slowly bleed out. But maybe this could be a buy the dip opportunity. Let me see what they do. So do beware. Notice most of the revenue comes from Singapore, then the UK. Then the rest of the world, British Virgin Islands. All right. So anyway, let me see. The revenue, again, they just IPO'd, so we don't get too much data here. But the revenue is down 0.2% year over year, and they lost 350 mil in net income. This could be an IPO expense. Anyway, I wish I could give you more thoughts on this one. I believe they're like a crypto exchange. Country, the Cayman Islands. Okay, so this company is headquartered in the Cayman Islands, probably to avoid taxes or something. So I'd be careful with that stock. I don't know if you have to pay any like foreign tax or ADR fees, but I'd be a little careful with that stock. Okay, so Nastradam said Hive is exploding. Oh, let me go see how the market's doing, by the way. Yeah, the market is open right now. SoFi's up 1%. Is anything down right now? Yeah, Futu's down, Disney's down a little. All right. Let me check Robinhood real quick. The QQQ is down by point. That's actually pretty good, considering how the market hit an all-time high. Yeah, look at Robinhood, or I mean Tesla. Tesla's up 1.6%. Yeah, US1 said Tesla stock looking good. You're right. Tesla stock is doing great right now. You know what? We'll analyze them after we look at Hive. So yeah, this is like a Bitcoin mining company, I believe. So unfortunately, I just don't see these Bitcoin mining companies actually outperform Bitcoin. So, and do beware, all their money comes from their Bermuda Triangle, so they don't have to pay any taxes. So be a little careful there. But you basically you value these companies based off their net asset value of the Bitcoin. So they have 630 million of assets, and the market cap was normally a 600, 700 million, but they're trading at a slight premium right now because I think there's just been some good news. But anyway, you don't normally see those outperform Bitcoin. So I would just rather own Bitcoin, to be honest with you. So let's look at Tesla right here. To be honest with you, let's see. I know Tesla has this new insane pay package. Yeah, Tesla chair defends proposed 1 trillion compensation for Elon Musk. So yeah, if Elon Musk can get the company to a $7.5 trillion market cap, he'll be worth $1 trillion. So yeah, this whole company right now is worth 1.28 trillion. So we'll have to roughly 7x the company, and he'll be worth $1 trillion, which is crazy. But right now, here's the thing about Tesla. To seriously consider them as they do have a cult-like following, but if we judge them the way we would any other company off their financials, this company is like objectively expensive. But everyone knows this. But if we look at the current PE, it's a 235. The PE is the net income multiple. So Tesla trades at 235 times net income. Here's why a lot of investors like me, I just personally can't pay that, because it's okay to have a high valuation as long as you're high growth. And Tesla just lost its growth. If we go to their total vehicles delivered, it's actually down 14% year over year. We can see the deliveries by model and stuff. But if we just go to their automotive segment here, which is 88% of the business, it's down 13% year over year. So that business is down 13. If we go to their other business, the energy generation business, it's down by 7.5. So unfortunately, both businesses are declining on Tesla year over year. But I get it. The majority of their market cap is coming from the future growth of the Tesla robotaxi network and the robots and stuff. But in my opinion, it's hard to pay that premium right now. Sales are down 11. Net income is down 16. The net income is actually down more than 16. They did a little gap net income trick because the operating profit was lower than the net income. So they had a little, funny money trick to the net income, making it look less bad than it really is. But anyway, Tesla's interesting. Yo, what up, Josh? He says, hope you had a good weekend. Thoughts on Novo at this price? Super low PE, trailing 12 months. Yo, are you talking about Novo Nordisk? So yeah, we kind of just covered them. So I'll be really quick about this one. So Novo Nordisk, this is that weight loss company. One reason the stock has been selling off is because they lose their patent exclusivity for Ozempic in a couple years. So this stock owns Ozempic. It's that weight loss prescription. Elon Musk, speaking of Elon Musk, he's on Ozempic. But yeah, this company, because of that risk, that's the reason. Because of the future uncertainty, that's why the PE is so low compared to the industry average. The industry average is 22. They're only at 14 times net income. Also, you get a great yield here, a 3.3% dividend yield. But again, it's that future decline of the future decline expectation is why the multiple is so low. Honestly, I think they've overblown it. So I think they're worth looking into. They are European. You do pay an ADR fee, but yeah, they own Ozempic and Wegovy. Nice yield too. Hey, Robert said SEHD. This is one of my favorite dividend growth ETFs. So if you're looking for a dividend stock and you're like, hey, I don't know which one to buy individually, well, you can just buy this ETF right here. You get a near 4% dividend with this ETF, and it just breaks your money up for you into all the 4% yielding names like AbbVie. I love AbbVie. I'd happily own that stock, just buy and hold them forever. Chevron, another an oil and gas play with the high yield. Home Depot, ConocoPhillips, Pepsi, Merck, Cisco, Verizon. So you get a lot of these high yielding names with this ETF. I like a lot of those holdings. So, all right, here. Let's see. Angel said thoughts on VSEE. So, yeah, to be honest with you, we don't really covered. Is this pre-recorded? Nah. Hey, what up, Neo? Yeah, hey, this is not pre-recorded, but what's up? Good to see you. Yeah, this is I'm streaming on YouTube and TikTok right now. Yeah, we might get to Opendoor. I kind of just covered Opendoor, so that's why I'm waiting a little. But check this out. This is an $11.5 million company. We don't really cover these kind of stocks. They're only worth 11 mil. So be super careful with this company. I honestly wouldn't even touch it. The whole company's worth 11 million. They lost 5 million this quarter. They lost 51 million last quarter. That's a huge chunk of their market cap. At least they have sales, but it's only 3 million of sales. There's real bankruptcy risk with this company, and that's why this stock, I believe, is at an all-time low. Penny stock. I'd just be really, really careful with them. I just won't even touch them. So, all right. So what up? Nope and Nope. He said, FLUT, and someone said, what do you think of the NASDAQ? Are you talking about NASDAQ, the stock, or the actual or the NASDAQ 100? Let me know want me to answer there. So, because NASDAQ is ticker symbol NDAQ. But anyway, here's Flutter Entertainment. So this is a big company, a $49 billion market cap. So they have no dividend on this company. So I can't really talk about what this company does, but if you look really quick, it's this. So yeah, revenue's up 15% year over year. Net income's a little choppy, they make 300 million. Then lose money. But overall, the trend looks like it's getting better. Did they just buy a company? Yeah, so look at this. That explains. So their assets just jumped up from 25 to 29. So they just bought a business. If you go to the cash from investing activities and notice it's really negative, you want it to be really negative. That means they're investing in the future, investing in assets, buying a company, buying land, buying equipment. If this number was positive, that means they're selling assets, they're selling part of their business for cash, which you don't really want. So you want it to be negative. So they just did some sort of acquisition. I wonder what that was. Pretty interesting. Hey, Marcel, how's it going? You said ET stock. Yo, that's Energy Transfer. I will give you a quick warning. This is one of the few stocks that give you a K1 tax form. So this actually isn't when you buy the stock, you're not actually buying stock. You're buying units because this is an MLP, a master limited partnership. So if you buy the stock or unit, you're actually getting a K1 tax form at the end of the year since you're technically a partner. But because they're an MLP, they have a huge yield, a 7.5% dividend. It seems sustainable. But yeah, they're a natural oil and gas pipeline business that, I would just stay away from them just because the tax complications, but you're buying them for the yield, that crazy 7.5% yield. Hopefully that was helpful there. Hey, what up, Driver? Good to see you. How's it going? Created Destiny. What's up, man? So, someone said, Richtech Robotics, let's do it. So what app is this? Yeah, hey, Neo, if you want, this is a brokerage I'm on where you buy stocks. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. So here's Richtech Robotics. This is one of the, I think they had just some like recent Nvidia partnership, but again, I wouldn't if I just want to buy and hold a robotics company for the long run, I'd be very careful with this one just because of this fact. I mean, and if you would buy this stock, I'd make it as a very, very small position. You're the GOAT. Appreciate your lives. Yay, thanks, Chris. Yeah, unfortunately, TikTok just took down my stream on my main account, so we're streaming on here. I appreciate y'all. Best way to support me is subscribe to the YouTube channel. As y'all know, my YouTube channel is called Nathan Robert. It's also in the link tree in my bio, but I'm streaming on there. But yeah, this is a $530 million company. So the whole market cap of Richtech Robotics is only $530 million. And here's why. I mean, they're basically a revenue-less company. I mean, the revenue is $1 million a quarter. They're losing a couple million in net income a quarter. So that's the one thing I would be careful with about this stock. I mean, they're only doing $1 million a quarter. I was about to say I could have sworn I was following your TikTok. Yeah, hey Josh. Yeah, I'm streaming on this is my only second account, by the way. Watch out for people impersonating me. There's a lot of impersonators, but yeah, this is my only second account. Stocks Live. In my main account there's a lot of like people impersonating me. My main account is exactly Nathan_Robert in the chance that someone's here and doesn't know my main account. But anyway, let's keep going here. I'm gonna drop a like. Hey, Sankey, thanks so much. You materialistically saw, I love it. All you do. Hey, thanks, Sankey. I really appreciate that. So, all right. So Steve-O, what's up? He said DEFT stock. Wait, did we cover this one? I don't know, but let's just cover them again. This is DeFi Technology. Another small one. They're only worth $830 million. It's not too bad. An $830 million company. They own Valor Inc. I don't know what that is. All the revenue comes from Canada, so this might be a Canadian company. And the revenue looks really choppy. Like the revenue was 13 mil. The revenue went negative. I mean, how is that even possible? There's some like financial business then. Capital markets. Their industry chain is crypto and stablecoin. Okay, so it looks like some crypto company. Well, anyway, let me see. What was the growth again? I can't tell if the business is growing. It says the sales are down 47%, but it looks weird. I wish I could give you more thoughts on that company. I'd be careful with that one. All right. So, hey, what up, Gentijan? Said FOLD stock. What is this one? Amicus Therapeutics. Any thoughts on the Gemini stock? Yeah, we'll look at Gemini, PTRN. Okay, so this is Amicus Therapeutics. The stock is not done too well. Yikes, the stock is the same price that it was back in 2009. So you bought the stock in 2009. You're actually down on your position, unfortunately. What do they sell? Galafold sales. Well, the sales are doing pretty good. It's up 16% year over year after going 17. Whatever this is. Wow, this used to be no revenue, 100,000. Now it's 25 million the most recent quarter. So that's pretty interesting. The combined revenue is up 22% year over year. The net income is down 55%. So they did lose their margins a little bit. Yeah, that's very weird that the net income went back negative. Maybe that's why the stock has been kind of trending down. They deleveraged their balance sheet a little bit. I mean, it's not the end of the world here. I overall like them. I mean, the growth is pretty solid. The ex-US is, so outside the US is most of their sales. Anyway, I wonder what's disappointing investors. I mean, yeah, they beat on revenue, they beat on EPS, and they beat on EBITDA. So maybe this company gave bad guidance or something. I don't know. The stock looks pretty interesting. Hey, thanks, Eric. You the man. What dashboard are you using, homie? Llama? No, hey, actually, I'm on a brokerage right here. It's where you buy stocks and stuff. If you want to get this app, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. So if everyone, what's up here? So the Gemini IPO, or wait, PTRN. Then we could pull up. Someone said PTRN Pattern Group does TikTok shop stuff. So yeah, let's see. It's sell consumer. Oh yeah, it says right there. TikTok shop. Pretty interesting. It looks like they're trying to. That's not too big of a company. They're only going to be worth 2.5 billion. But hey, that's a recent IPO. You know what? We'll put them on the watch list. Thanks for that. So yeah, a lot of the IPOs recently, like as soon as they IPO, they rally up like crazy. Like if you go to Gemini, for example, the IPO price was $28. They rallied up all the way to 40. and then kind of rallied down a little bit. So maybe you can make a trade off the IPO. But yeah, here's Gemini. This is it's like a mini Coinbase crypto exchange. Where does their revenue come from? Do we get that data yet? They just IPO'd, so we don't get too much data here. And the data we do get, it says the revenue's down 7.7% year over year. They lost a lot of net income, more liabilities than assets. But usually after they IPO with the funds, they like deleverage a bunch. So anyway, I'm watching that. So I honestly, I'd be careful with Gemini for right now. I probably just wouldn't touch it for the time being. But it probably just will move with Bitcoin. Miguel, what's up, man? You the man with stocks. Hope all is well. What are your thoughts on AVGO Broadcom? Hey, thanks, man. Hope you're having a great Sunday. Let's do it. So, hey, what up, Sebastian? Yeah, we'll try and get to ACTH and Grab. Hey, what up, Adam? Let me know if you want me to look at Grab stock. Yeah, we'll do that one too. So, anyway, here's Broadcom. This company is at an all-time high. So, first off, congrats if you own this stock. You got to be doing good. They just signed a major deal with OpenAI. Yeah, Broadcom secures $10 billion AI partnership with OpenAI, which is pretty cool. Broadcom CEO granted stock or performance of $100 billion AI revenue target for him to get a stock compensation. All right, well, anyway, a lot of people know Broadcom for their semiconductor solutions, but a huge chunk of their business is their infrastructure software. I mean, this business is growing like crazy. Let's see how their semiconductors growing as well. Semiconductor solutions up 26% year over year, also to a record. Absolutely ridiculous. So they're just a growing business. It's kind of like NVIDIA with the higher yield. If we look at the dividend, you get a 0.6% dividend yield. Not too bad. I did not know you had this account. Yeah, hey, Ranger John, what's up, dude? Yeah, TikTok took down my main stream on my main account. So we're streaming on the second account. Hey, but good to see you. Yeah, that's why best way to support me is subscribe to my YouTube channel. So anyway, check out the growth. The revenue's up 22% year over year. They're making a lot of net income, 4 to 5 billion in net income a quarter. The free cash flow is even better. That's what FCF stands for. They did 7 billion of free cash flow this quarter, up 46% year over year. So they're just extremely growthy. I love Broadcom. They deleverage too. They're a beast. Valuation might be a little too high here, but I do really like them. Okay, so let's see right here. Grab, what up, Adam? Let's do it. GRAB. Then we can pull up ACTH. So this is Grab Holdings right here. If you're wondering what does Grab do, they do exactly what Uber does, but in a bunch of different countries. So the same like ride sharing business, but notice the US and Canada isn't on here. You know, they're in Malaysia, Indonesia, Singapore, Philippines. So that's why it was absolutely genius for Uber to buy this business. Uber has a 13% stake in this company. So, and they're also, Toyota Motor owns 5.5% of all the shares. So they're kind of backed by Uber, backed by Toyota. They're really growthy. I mean, if we look at the revenue, it's up 23% year over year. They're net income positive every quarter. Analysts are expecting the revenue to continue to climb up higher. You know, in 2 quarters, supposed to be 940 million. So Grab is a great business, in my opinion. I might be a little too high of a valuation right here, but I really like them, kind of backed by Uber. So let's see what this one is. ATCH stock. So Atlas Clear. Ooh, so unfortunately, we don't really cover these kind of stocks on the channel here. So if you look in the top right, the market cap, this whole entire company is only worth $6 million. So the stock's at an all-time low. The whole company is only worth $6 million. Do they have sales? Sales of 2 million, losing a couple mil a quarter, more liabilities than assets. So yeah, I would not touch that one, to be honest with you. You got to be super careful with that stuff. What up, Indie Bros? He said, what are your thoughts on BULL? I just started a long position, hoping Hood was a benchmark. So yeah, that's kind of the hope there for Webull to follow Robinhood one day. Webull, actually, let me just pull up Webull stock because that's what you're asking here. I do own Robinhood, by the way. I might be biased. So yeah, here's Webull stock right here. They just started doing this. So I sound all over the place. But anyway, I think the revenue growth is going to continue to be really good for the future because they just introduced crypto assets back to Webull. So you can now buy crypto on Webull again. So I think that's going to continue this growth. It's going to be an earnings tailwind. The revenue's up 46%. That's really good. They are still struggling with net income positivity, losing or making and losing money. But I do have a Webull account. I am a user. I've probably given them a lot of transaction fees. So yeah, here's my actual Webull portfolio. And then let me see how the market's doing right now. So it looks like SoFi is up 1.2%. Futu's down a little bit, not too bad. Anyway, let me check Robinhood too really quickly. Yeah, it looks like the Qs are down a slight bit. QQQ's down 0.03. Tesla's doing great. Tesla's up 1.6. Anyway, all right, so let's get back to the analysis here. So yeah, Webull, I think they should be interesting. The next, I would just hold them. I wouldn't call you crazy to just buy and hold shares of Webull. All right, so hey, what up, PM? Good to see you. And hey, Looney, good to see you, Looney. And Two Trick, good to see all of you. Hope you're having a great Sunday. So, what do you think of Navitas? Yeah, what's the ticker symbol for that one again? Wait, Navitas Semiconductor. I remember not liking that stock because the financials looked terrible, but they had a huge rally on an Nvidia partnership. So, APTIV. And then we can look at Qualcomm. Nate the Robert, new account. Yeah, hey, Dino. I was just streaming on my main account and TikTok took down my stream for like no reason. And I have to appeal it and it takes forever. So I'm just streaming on my second account. So I appreciate y'all being here. By the way, the best way to support me is subscribe to my YouTube channel. YouTube channel is called Nathan Robert. You can just type that into YouTube. It's also in the link tree in my bio. But anyway, this is an $18 billion company. So let's go analyze them. The stock is the same price that it was back in 2015. So you bought the stock in 2015. You're kind of down on your position. They're trading at 18 times net income. That's a pretty fair multiple. They're in electrical distribution systems. Engineered components, advanced safety and user experience revenue. So let's see. When we combine all those businesses, the revenue is only up 3% year over year. So the revenue is up by 3. The net income is down by 57. Looks like it was a one-time adjustment though, because if you go to their operating profit, they're always making like 500 mil a quarter. So they really should be making like 300 to 400 million of net income a quarter. So yeah, they're having some weird one-time adjustments. Like, I don't know how they lost net income last quarter, but made 480 mil of operating profits. So I do have some questions, but it's not the end of the world for this company. I'd still be pretty careful. No dividend, but yeah, I don't know if I'd expect them to outperform in the long run. All right, so Qualcomm, let's do it. So Qualcomm, I love this stock right here. I think they're going to be a great dividend growth company. So if you like dividends, this one should you buy this one in it has a 2% dividend yield now, in 5 years time, your yield on cost will maybe be like 5% or something, or 10 years time, whatever. So check this out. They're trading at 15 times net income. I mean, that's such a low multiple. Like compared to the industry average is 46. They're only trading at 15 times net income. So pretty fair multiple. We can see their smartphone chip market share. They have a 28% smartphone chip market share, pretty strong. And here's probably why the multiple is a bit low for the industry. It's because the growth isn't as growth. I mean, it's still good. It's double digits. It's up 10% year over year. Revenue's up 10. And look at this net income. The net income's up 25. So they managed to continue to grow the margins. That's great news. Yeah, 28% net margins. They're making 2 to 3 billion of after-tax net income a quarter. And they bought back 4% of all the shares. There's actually no way. Well, probably because the valuation is so low. So the dividend only costs 900 million. Since they have so much leftover money, they're just spending 2 to 3 billion of their after-tax net income a quarter is just solely buying back their own shares. So that's how the net income is up 25 and the net income per share is up 29 because you own 4% more of the shares. You own 4% more of the company via share buybacks and a 2% dividend yield. That's such a shareholder-friendly company. You know what? Let me put Qualcomm back on the watch list here. I love Qualcomm. Okay, so let's see. TikTok took it down as soon as you said we don't talk about this sector here. Oh my goodness, you know what? You're exactly right. Bro, I was talking about this certain sector that I won't mention again. Dang, JC, you're right. That must have been it. So yeah, RIP the TikTok stream. So what up? SJ said CNC is that Centene. So this is that Medicare Medicaid stock. They're kind of like the next domino to fall after United Healthcare. So here's the thing: there's a lot of regulatory headwinds around the Medicare Medicaid business, and if we look at where the revenue comes from, 60% of the revenue is from their Medicaid, 20% is their Medicare. So they're kind of facing the same problems United Healthcare is, potentially fraud overbilling the federal government. And look what that's done to their net income estimates. Like, they're usually making positive net income every quarter, but look at what the analysts are expecting. Lose 39 cents of net income next quarter, lose $1.20 of EPS. So that's why the stock has collapsed so much. The future uncertainty. So I, yeah, UNH might be a better one just because of the higher yield, but or I don't even think CNC has a dividend yield. Man, I wish I listened to the WSB hyped around Palantir. What's the most promising long-term hold? Hey, yeah, we could actually, let's pull up Palantir. Let's do it. So Palantir, PLTR, you know, a great long-term hold is probably just some of the Mag 7 like Google, Microsoft, Apple, Meta, Amazon, just buy and never sell type companies. But here's Palantir right here. This company is an absolute beast. They're worth $400 billion. I want to own this company. I really want to own Palantir, but I just can't pay their valuation because they traded 118 times revenue. Not 118 times profit, but revenue. So here's this right here. Here's why they probably deserve a high premium, though. A lot of the revenue comes from the government. If government revenue is 55% of the business, and it's up 49% year over year. The growth rate is growing, like it's up 49% year over year after growing 22, after growing 14. So 49% is great. Record sales on the government business and the commercial side, like with S&P 500 companies. The commercial revenue is up 46% year over year, also at a new record. So both businesses are booming on Palantir. They're the most profitable they've ever been. They had a $1 billion revenue quarter. 330 million of it was net income. So that's easy math. 33% net margin. Legit no debt on this company. They're debt free. $6 billion of cash. I mean, that just gives them tremendous freedom, huge safety net, takes a lot of risk off the table. No debt on the books. Yeah, Palantir, great one. I just can't pay their current valuation, but I do love them. All right. So let's see here. Overreaction, they popped Friday. Let's see. CMCSA. Oh, this is Comcast. Yeah. So, and hey, what up, Zio? Good to see you, Zio. Yeah, we're streaming on the second account tonight. I'm buying Amazon even now. Yeah, me too. I love Amazon. So let's check this out. Here's Comcast. Their cable business is kind of dying. It's slowly fading out. Like the residential connectivity business, like as we can see, it kind of just declines by single digits every year. So do beware. But they have all these other businesses, like their media business, like they own the Universal Studios, like they own all the Despicable Me movies and all that. Yeah, the studio business. They own the theme park. Yeah, Universal Studio, the theme park or whatever. So yeah, they're in a bunch of other businesses. If you look at the revenue year over year, though, the revenue just doesn't grow that much. Like the revenue's up 2% year over year. Single digit revenue growth. They're making 4 to 5 billion a net income a quarter. They have a nice share buyback program though, because this was a one-time adjustment, so it's actually harder to tell. Anyway, I like this is kind of like a value play. Like they legit trade at 10. It says 5 times net income. Again, you should half this number. So they're really trading at 10 times net income. So they're honestly, I like Comcast as like a dividend growth play, but I don't really expect Comcast to outperform the market in the long run. Another stock kind of like Comcast is Disney. I own 15 shares at Disney. And hey, Ranger John, no way, Ranger John. Thanks for all the roses. The dolphin, I really appreciate you, Ranger John. If you got a stock you want me to look at, let me know. If you want, I can check out Amazon. Let me see how the market's doing real quick. SoFi's up 1. There's a decent page of green. A little bit of red, not too bad. All right, so Chalk said what platform? Yeah, hey, I'm on a brokerage right here. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's my favorite app or my favorite brokerage. So yeah, All right, so what up, George? Hey, what up, Ed Music? Good to see you, man. And George said MKTX stock. So this is Market Assets. So this company actually just got removed from the S&P 500. So Enphase Energy and this company just got removed from the S&P 500. Let me see. So they have a 1.6% dividend yield. The payout ratio looked a little high. So end-to-end trading solutions. Okay. So the revenue's up 11% year over year. That's not too bad, at least. So revenue's up 11, net income's up only 9. So they lost their margins a little bit, but they normally have really good margins, like 35% margins. Something happened last quarter. This was a little one-time adjustment. Uh, Honestly, this stock doesn't look too shabby. I mean, what's the net income multiple? It's really low. It's quite lower than what it actually is. So yeah, they're probably trading around 25 times net income. They have great margins, 33% net margins. Revenues up 11. So honestly, that one might be oversold. I don't know. Up for an Amazon read? Yeah, let's do it. So, Amazon, I own this stock as well. Check that out. Every dip I find on this company, I try and buy the dip. Like after Amazon earnings, I bought another share of them. So, let me give you a quick analysis on Amazon why this is a perfect buy and never sell stock. So, first off, a lot of people know Amazon. Actually, let me zoom back out and see if I can find this. Like, yeah, a lot of people know Amazon for their online stores, but mm, the most valuable part of Amazon is actually right here. They're AWS, Amazon Web Services. They're the number one cloud service provider in the world, number one market share. It's over 100 billion of annual revenue for them. That's the crazy part. It's over 100 billion of annual revenue. It's their highest margin business because they're not making too much margin delivering you packages the next day. They're also in advertising services. Twitch.tv. They own Prime Video, which has some ads on there. They have their subscription revenue from all the Amazon Prime members. So they're kind of facing the law of large numbers. Though, like how are you going to double 167 billion? But check this out. The revenue's up 13% and the net income is up 35. So that means they're expanding margins. They now have double digit over 10% margins every quarter. If we zoom out, it was a tough buy, negative margins, single digit margins. So in my opinion, Amazon, they're also a huge robotics play. Like it's so many businesses in one. Like I said, they own some physical stores like Whole Foods. They're expanding their same day grocery delivery business. They're a subscription model, advertising, cloud business. So e-commerce, giant robotics company. So Amazon's like an ETF in one. All right. So what have you invested in with the smallest market cap? That would probably be a company in my Roth IRA. If I go to my Roth IRA right here, it'd probably be Delcath Systems, DCTH. They have a market cap of which 379 million. So that's a very small market cap. And I normally wouldn't buy a stock that looks like this. If anyone wants me to cover DCTH, actually I'd love to go over them. I might go over them in a minute here. But Rambo Dash, I wanted to cover this stock first. Let me look at Rambo. Let's look at Adobe. I have not looked at them tonight. Strong financials, but bearish. What's your take? Yeah, one reason Adobe has just been getting hurt is because the AI thesis is hurting them. Like right now, financials look great, but like where are we gonna need Photoshop in 10 years? Because like I know people like I know someone they just made an incredible logo in ChatGPT. The AI just generated. So but honestly, I think that they've oversold this one. I think we're always going to need the final touch on Adobe for art and stuff. So humans will always need that final touch. So I really think instead of them being an AI loser, they might be less of an AI loser than we think. So yeah, that's why the multiple has collapsed on Adobe. They're trading at a 21 PE, which means they're trading at 21 times net income. In the business, they look at this. They actually beat on every metric. They beat on revenue. They beat on net income. They beat on EBITDA, but the stock fell, or the stock didn't really fall. It just basically traded flat after earnings. But yeah, the revenue's growing double digits. It's up 10% year over year. The net income is up 7.5. They're making 1.7, 1.8 billion of net income every quarter. What is Adobe doing with basically 1.8 billion of after-tax net income a quarter? Well, the best part is they are plowing it into share buybacks. I mean, they're spending 2 to 3 billion of net income a quarter on share buybacks. And this is what that does for you. check this out. The net income was up 7.5, but the net income per share was up 13 because the share part of the ratio went down. So anyway, I honestly, Adobe's great. I'm on an Adobe product nearly every day. So yeah. Someone said that AI will destroy Adobe. Yeah, but potentially. Can you explain market cap? Yeah, the market cap is just how much the company is worth. So let me pull up DCTH for you. DCTH, if we look at this stock right here, the whole entire company is only worth $379 million. If we go and compare that, let me go to my market cap watches. For example, the company Apple is worth $3.5 trillion. Google's worth 2.9 trillion. That's the market cap. That's how much they're worth. If you wanted to, technically, you could buy the whole entire company of Apple for $3.5 trillion. That's what the market is currently valuing them at. And anyway, here's a stock I normally wouldn't talk about and recommend. That's that company. Look at this right here. If we look at them on the max chart, they are down 100% all time. And as much as I like this stock, I cannot trust a lot of money with this stock. I only put $150 in this company right here. I'm down 5% on my position, but let me tell you why. Out of all the $380 million companies out there, I think this one is one of the better ones. Check this out. So remember this in the back of your mind. The whole entire company is worth $380 million. And guess what? They have $81 million of cash and no debt. So a significant chunk of their market cap is just their cash on hand. That's a huge, that gives them a lot of freedom, huge safety net, legit, no debt, lots of cash, and they're growing. Very strong. Revenue was $7 million. Now it's $25 million, a 3x increase. And out of this $25 million revenue, they made net income. That's the thing. So it's a $300 million or $380 million company with $81 million of cash that's making net income every quarter. And they have so much cash on hand that they're making a bunch of interest on their cash. They sell this liver haptazo kit. Basically, I don't even know if I should get into it because no one really cares, but they single out the liver, dose it with this calcification thing. And then I don't even want to get into it. And as it mixed with the stuff leaves the liver, they filter it all out, and then boom, you're good. It's a super risky company, but I just like the financials there. Okay, hey, what up, Lulu? Said Nvidia, please. Yeah, we haven't looked at Nvidia today. So, yeah, by the way, we're streaming on my second account right now. TikTok took down my main stream, so RIP. But yeah, here's Nvidia, huge company, a $4.3 trillion market cap. So an absolute monster of a company. Obviously, we know they have a huge GPU market share. They have a 20% PC GPU market share. They have this automotive software. Lucid actually uses their automotive software for their autonomy driving cars. It powers them. And but mainly Nvidia is a data center play. Nvidia makes their own GPUs, and data centers need GPUs. So Nvidia can just supply their own GPUs to their own data centers at the cheapest cost and the quickest. So anyway, check this out right here. The revenue's up 55%, but check out the margin specifically. The revenue was $46 billion, but out of this $46 billion, of revenue, $26 billion of it was after-tax net income. That is incredible margins on Nvidia. The cash flows are growing as well. So Nvidia is just a beast. One thing I will point out, law of large numbers, if you look at the market cap, they're a $4.3 trillion market cap. If you bought the stock right now, for you to double your money, they have to be worth 8.3 or 8.6 trillion. Delcath, you must be paid. Hey, what up, Private? No, man. Hey, as much as I love Delcath Systems, I would not put a significant amount of money in this stock. But right now, every day, basically before today, they didn't sell anything. They had no sales. They deserve to be at all-time lows. Well, now it's like right now they're the most justifiable buy they've ever been because they have $81 million of cash, no debt. They have sales now. They're making net income every quarter. So those were kind of my reasonings there. Hopefully that made sense. So, hey, what up, Leo? He said, what trading platform are you using? Yeah, hey, I'm actually on a brokerage right here where you buy, stocks on and stuff. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Pretty cool. All right, so Ben said Marvel stock, MRVL. This is one of the cheaper chip plays out there. One thing you're heavily watching for Marvel is their next quarter. So you're basically just waiting for next quarter because check out what analysts are expecting. they're expecting the EPS, they basically just went net income positive. They used to burn through net income every quarter. They used to lose a couple hundred mil a quarter, but now this company's actually making a couple hundred million in net income a quarter. And, this 194 million in net income is the same as 22 cents of EPS. And check out what analysts are expecting next quarter for EPS. It's supposed to go from 22 to $1.40. It'll be over $1 billion in net income. So be super careful next quarter. That's what you're really watching. They're trading at 22 times forward net income. So or forward EPS. So yeah. Advice on how to get $1 trillion stock payout like Elon. Yeah. Yeah. I need to know that advice too. Kenvu. Hey, Beatish, I remember I've heard of Kenvu. I don't know the ticker symbol though. Didn't they spin off from Johnson & Johnson? I don't know. But yeah. Startup prescription companies are risky. Yeah, exactly. Exactly right, Looney. More like gambling on getting FDA approval. Yeah, luckily this stock actually has sales and has FDA approval. But yeah, with these kind of companies, another one I have exactly like DCTH is CRMD Coremetics. This is another company. They only have one product. They're the only FDA approved product version of them. But yeah, they're only a $900 million company. And they only sell one product, and 60% of those product sales come from basically one customer. So yeah. Espresso, what's up, dude? He said Constellation. Yo, Constellation Energy, I love them. I actually own them in my main account right here. If I go to my main dividend growth portfolio right here, my largest holding in here is now CEG, Constellation Energy. This is actually the largest nuclear reactor company in the US. If you're looking for a pure play to get exposure to nuclear energy, CEG is the best way to do it, in my opinion. I'd stay away from OKLO, stay away from SMR. I'd buy Constellation Energy. They have an incredible dividend. They do share buybacks. They're doing synergistic M&A. It looks like Meta's having a nice little rally right there. Let's go Meta. Let me see how the S&P 500 is doing real quick. So the S&P 500 is up 0.03%. Hey, let's go. Ooh, I haven't looked at this stock, I don't think, ever on stream. I actually used to own this company. I made 100% on this company, and then I sold it. It was actually on this rally right here. I bought the stock exactly on this candle right here, and then I sold it up here for 100% gain. I actually have a YouTube video about it that I made, legit, one of my first ever YouTube videos. But anyway, yeah, NerdWallet, they collect a bunch of affiliate fees. So it says insurance revenue. They're not an insurance company. They just collect a bunch of like referral fees. Or maybe they acquired an insurance company. I know if I go to their cash from investing activities, they did some sort of acquisition recently. But anyway, they collect a bunch of referral fees, emerging markets, credit cards, loans. Anyway, let's go to their total revenue. So the revenue's up 25% year over year. That's pretty good. Revenue's up 25. The net income is a bit choppy though. So actually, if you average out the 4 quarters, they're making like 5, 6, 7, 8 million in net income a quarter. Not too bad, but again, just still a really small company that really just hasn't been able to grow the profits since I don't know. Anyway, NerdWallet's not terrible. I mean, they're $800 million company. They're actually one of the better small market caps out there. So anyway, NerdWallet, I like them more than I dislike them, but I wouldn't have them as a huge position. Is Figma a threat to Adobe? So yeah, I know Figma. I don't know exactly what they do, but I know someone. He's like a app developer. He made an app in the Apple App Store, and he used the Figma software. That's all I really know about this platform right here. It's an AI-powered design platform. FigJam, Figma Slides, Figma Design. So some sort of like art kind of, Adobe kind of product. So yeah, I don't know if they do exactly like a Photoshop type thing, but maybe they could come for Adobe's, customer. The revenue is really growthy. Look at that growth. The revenue's up 41% year over year. And they made net income the past 2 quarters. So actually, let me re-put Figma on my watch list. Things look pretty good here. Good balance sheet. Yeah, actually, Figma looks interesting. CEG has been a beast of a stock for me. Yo, I'm glad. Yo, you own it, Looney? I'm very glad you own it. That's a great one. BRKR. And I'm not selling that one either. I'm not. The thing is, Constellation Energy, they're about to finalize their merger with Calpine. And as soon as that merger finalizes, their EPS instantly goes up by $2 a year, and their yearly free cash flow, it's accretive to EPS $2 a year and accretive $2 billion a yearly free cash flow. Great news. They're acquiring Calpine, this great natural gas business. And they're owning they'll be the number one in the US geothermal energy provider. They basically collect the steam from geysers, like natural steam from geysers, and turn it into a steam engine. And this one geyser asset that they own powers 20% of California's clean energy. And that'll now be owned by Constellation Energy. Anyway, let's look at BRKR. What is this stock? I don't know, but the stock does not look like it's doing too well. They're the same price as they were back in 2017. So it looks like Brunker Scientific Instruments, that revenue is up 7.6% year over year. Brunker Instrument Scientific Nano, that one's down 1%, down 10%. So when we blend those together, the total revenue is down by 0.4. So that's not great. It kind of looks like they lost the growth. The growth went negative. And this is the bad news. Revenue's down by 0.4, but the net income is down by 44. So the margins are collapsing. When we go to the net margin right here, the net margin was only 0.5. They were barely profitable. These year-over-year declines in the net income are not good. If we zoom out, these net income numbers used to look a lot better. So something is happening to their profits, which is probably why the stock looks like how it does, because sales went negative, the profits are longer. So I'd be careful with that one. Android said, what software is this? Yeah, hey, I pasted it. It's in the link tree in my bio, the very first link there. I'm on a brokerage right here. It's my favorite app to do analysis on. Oh, yeah, and they just added like the Nancy Pelosi portfolio tracker. You can like batch trade, follow into their holdings and stuff. And yeah, basically these are super investors. By SEC law, they have to make all their trades public. So, you can really get this information anywhere, but it's just cool to see. All right, so let's see here. Good evening. Hey, Free Me. Good to see you, dude. Hope you're having a great Saturday or Sunday. KVUE, that's the company? Okay, Kenvu. So yeah, this is the company that split off from Johnson & Johnson, or some sort of healthcare company. I'm pretty sure it was them. But yeah, they're a $36 billion company. They sell self-care products, essential care, skin health, and beauty. So, self-care revenue. So looks like the business isn't growing much, which is unfortunate. So yeah, the revenue's down 4% year over year after falling. So they're not that growthy. Luckily, they're very net income positive. They're making 300 to 400 million of after-tax net income a quarter. So actually, it's not too bad. You get a 4% dividend yield on this stock. That's actually a really high dividend yield. I actually like them. I wonder what brands they own for their health and beauty products. Some of these beauty healthcare products have really high margins, essential health products, So yeah, they probably sell a basic commodity. I just don't like that their sales are declining. So I'm thinking of buying Reddit. What's your opinion? Yo, Jim, I do own Reddit. Kvu is the Tylenol maker, and that is why it dropped. Oh, hey, thanks for that, Private. So hey, Kvu stock owns Tylenol. That's really popular. So anyway, someone asked about Reddit. Yeah, what up, Jim? So I actually own Reddit. This is one of my favorite stocks that I own. They've been an incredible performer for me. They deserve to be at all-time highs. I mean, they've really blown away every expectation. I mean, who expected Reddit, for the Reddit to be up 77% after growing 53%? So the revenue's at a record, extremely growthy. They're also the most profitable they've ever been. 90 mil in net income this quarter. Also, they have an absolute fortress of a balance sheet. They have no debt at all on Reddit and over $2 billion of cash. Cash flow looks really strong as well on Reddit. So anyway, financially, I love Reddit. Their ARPU, average revenue per user, is up like 48% year over year. So they're making 48% more money per user than they were a year ago. So yeah, they're making like $5 per user. Pretty crazy. CG, yeah, they own like 50% of the nuclear reactor fleet in the US. I love them. So Kvu is a spinoff of Johnson & Johnson. Yeah, isn't that true? Kvu is a spinoff of Johnson & Johnson or something like that. I don't know. STLA, they own Dodge and Jeep. So yeah, this is Stellantis right here. Unfortunately, these kind of car makers, you look at Ford, here you look at Rivian or something, the stocks just haven't done too well because they burn through money. This is a European company, by the way, so we're going to convert the currency from USD to or from European to USD. But yeah, actually the profits just came back. So this is good news. They made 4 billion of, after-tax net income this quarter, but look at what it kind of was before today. It's so cyclical. Like they go from making money, then they lose a bunch of net income. Oh, actually, hold on. Forgive me here. This is from 2020. So they report in halves. So okay, they are still losing, or they lost net income for the first half. So honestly, I wish I could give you more thoughts on this company here. They have an insane 8.6% dividend yield. That's an insanely high dividend yield. So anyway, yeah, this is the company that owns Jeep, Dodge. That's interesting. I like following what Nancy Pelosi does. Yeah, hey, you can track it on this brokerage right here. Yeah, you can follow the Nancy Pelosi portfolio. You can see her exact holdings by weighting, like Apple's her largest holding, Pan W is her smallest holding, and you can see her like performance versus the market. All right, anyway. Hey, what up? Roscoe, NUE. Let's check it out. So I think is that New Scale or New Corp or New Core? Okay. So New Core stock, let me check this stock out. So they're a $32 billion company. What's the valuation on this guy? So they're trading at 25 times net income. They're in steel mills, raw materials, steel products. So it looks like a steel company. And they're making a lot of money. That's crazy. They're making a couple hundred million of net income a quarter. It is it has declined. Oh wow, they used to make like over a billion and 1 to 2 billion in net income a quarter. So something has made their net income kind of fall. So that probably maybe explains why they're off the peak. But still, they're printing money. They're still making a lot of net income, even though it's declined. So yeah, this is probably one of my more favorite steel plays. Like if you look at tickers like US Steel or some of the other steel plays, they're all like net income negative, but they're still making hefty profits. They look great. They look great. Tariffs will mess with steel companies. Yeah, that is true. Maybe we want to bring the steel manufacturing back to America. I don't know. Guess we'll see what the administration wants to do. So, okay. Your other account got banned? Yep, you guessed it, Luffy. We were streaming on my main account and then TikTok took down the stream. So, yeah, that's, I appreciate everyone on the YouTube stream. So someone said, or J43 said, MicroStrategy, MSTR. So this is basically a Bitcoin proxy. What this company does is they dilute the shareholder to issue, they issue shares to get cash, and then they just buy Bitcoin with that cash. And so far, it's worked out great. And that explains how their assets went from 7 billion to 64 billion. If we go to the cash and financing activity, this is how much they're diluting you. Like literally this one quarter. Like this is unseen. They diluted, they issued $18 billion worth of stock that quarter, and then they bought 18 billion worth of Bitcoin. And that 18 billion of Bitcoin that they bought is up like 30%. So that's how this Ponzi can continue. So anyway, I honestly, I wouldn't buy this one. I'd probably just buy actual Bitcoin. But yeah, Michael Saylor owns 7% of this whole company. And you basically just value them off their net asset value of the Bitcoin they own. So, yeah. All right. So, yeah. What up, Jaden? That's MicroStrategy. Hey, what up, Patrice? How's it going? And Leet said Rio. Yeah, this is Rio Tinto. This is a huge, like aluminum, iron. They're like a mineral play, and they also have a very nice dividend yield. But do beware, they don't really outperform. Like the stock is the same price that it was back in 2007, but you're buying the stock also as a huge, for a huge dividend. You get a 6.5% dividend, and it's actually sustainable. Yeah, they change their dividend every single quarter. So you never know what it's going to be. It's a mystery. So yeah, they trade at 9 times net income because they just sell a commodity. Like they sell iron. Yeah, like I said, they sell iron ore, aluminum, copper, that kind of stuff. And most of the revenue actually comes from China. So do beware. That's another reason why the multiple is pretty low. 60% of their sales come from China. But yeah, they're making real net income. This is in USD. For the full year 2024, they did 11.5 billion of after-tax net income. So pretty crazy. They also own like some railroad networks. So yeah, that's mainly aluminum, nickel, iron play. Any yield max stocks you like? Not really, to be honest with you. Not really. Maybe maybe TSLY since I'm kind of bearish on Tesla. Maybe TSLY since it's selling calls on Tesla. But no, uh, yeah, none. What's the most promising stock you're looking at right now? Hey, that's a good question, and I don't really know. Because right now, to be honest with you, I wouldn't buy a lot of stocks at their current valuations. But some stocks that look attractive to me are Progressive Corp, ticker symbol PGR. That blue, I'm basically flat on my position. That's my average cost basis. I bought 3.8 shares at 248. It's at 248. So Progressive looks interesting. It's a dividend growth stock. Also, Sprouts Farmers Market. Where is that one? SFM, yeah, Sprouts Farmers Market. It's another stock I own 7 shares of. It's that blue line. I'm slightly down on my Sprouts Farmers Market position as well. So those ones look interesting to me. But a lot of the good companies that I would want to buy more of, the valuations are too high, like an Amphenol Group, a Comfort Systems, or a Powell Industries. The valuation's just too high. Rio has some of the biggest copper mines in the world. Oh, hey, yeah, copper, that's one commodity I really like. So here's Progressive Corp. Let's do it, And hey, what up, Zio? What do you think of Opendoor at $9? I think it's way too highly valued at $9, but the momentum could continue. I just stay away from Opendoor. So we'll look at them. Oh, hey, we'll look at APLD too. And Denshin, hey, what's the ticker symbol? What is Denshin Mines? Yeah, hey, if you got a stock, give me the ticker symbol and I'll check it out for you. Yeah, Denshin Mines, I think that's like a gold play. So anyway, here's Progressive Corp right here. This is an insurance company. And if we go to their personal lines, this business is booming. The revenue is up 23% year over year after going 22, after going 42. So the growth just continues. Like there is no red over here. It just continues to grow and hit a record every quarter. So the business is booming. And it's not just the sales that are growing because the sales are up 21, but the net income as well. They're printing money. I mean, they made 3.2 billion of after-tax net income this quarter, 2.5 bill, 2.4. And they also have a cool thing where they do a special dividend every January. So normally this company only pays you 10 cents a quarter. Okay, there it is. They normally only pay you 10 cents a quarter, but every January they do a special dividend. They did a $4.50 dividend. The same time last year, it was only a 75-cent special dividend. And I think this year's special dividend is going to be crazy high. Okay, TikTok says I'm AFK and have to go fill out a CAPTCHA. Okay. All right, sorry. I had to fill out a CAPTCHA because TikTok said I was AFK while streaming. So thank you, TikTok. But anyway, check this out. Yeah, the net income's booming, 3.2 bill. I think the special dividend will be pretty high next January. So yeah, that's an insurance company. How much are you up this year? Oh, or like year to date? Yeah, so here's this portfolio. Year to date, we are up 53% year to date. So pretty crazy performance, or $8,700 in this portfolio. We also have a Robinhood account. And year to date, which means since January 1st, we're up 15% in here. We also have a Roth IRA, by the way. We're up 12% year to date in here. We basically just started this one a year ago. But yeah. Oh, and then we have this account right here. This is everyone's favorite. This is my like growthy portfolio, my Webull account. We're up 17% all time in here. And we have a lot of growthy names like Reddit, Robinhood, SoFi, Disney, AMD, Supermicro, T-Mobile. We have some losers as well, and some unseen losers. Like I sold ChargePoint for like a $2,000 loss. That's how we're only up 17% all time in there. So anyway, let's keep going here. So, what up? FFO3 said IOVA stock. What is this one? Ivowin's Biotherapeutics. So yeah, I'd be pretty careful with this company. So they're only an $800 million market cap. So the whole company's worth 800 million. The stock is kind of at all-time lows as well. So do be careful about that. But let's go judge them off their financials. So they sell Amtagavi. Well, it looks like the revenue's doing pretty good. I mean, the revenue's up 92% year over year. So yeah, they just transitioned from basically a revenue-less company to finally having revenue. It looks like this might be why the stock is struggling. While the revenue is really growthy, it actually missed expectations. Analysts were expecting 67 mil. They only made 59. Last quarter was pretty bad too. They were expecting 82. They only did 49. So that might explain why the stock has kind of been so depressed. How about the net income? Oh, wow. Okay, that's actually really tough. So kind of think about this logically here for a second. You're buying an asset that's worth $800 million. The whole company is worth 800 million. And just in the past 3 months, they lost 100 million. The 3 months before, another 100 million. I mean, that's 1/8 of the entire company just in the past 3 months, just in the past quarter. So that's actually a bit scary, those huge net income losses. Okay, so DNN, is that the okay, Denshin Mines right here. So, actually I believe this is a uranium company. So forgive me, this isn't a gold stock. Judging by the stock price, if I had to guess what commodity this is tied to, I would say uranium. So yeah, they're in mining. Do they have any revenue though? So they have no revenue. The sales are basically 900,000 a quarter. They have a really good balance sheet though. Let me see. 69 mil of cash, no debt. Um, yeah, I'm guessing. Actually, let me double check here. Yeah, uranium right here, uranium and nuclear power. So honestly, I have a better uranium play for you. Actually, if we look at ticker symbol URA, that's their global X uranium ETF. Check it out. The two stock charts look very similar. But if I had to, I would pick and choose, a uranium stock, and almost always I would just pick CCO Cameco. This is the number one uranium stock by far, in my opinion. Not even a close second place. We're starting to order all our uranium from Canada instead of from Russia. And uranium is what powers nuclear reactors. So yeah, hey Marina, no way. Thanks so much, Marina, for the rose. I really appreciate that. If you got a stock you want me to look at, let me know. I'll check it out for you. So Gooch Gobbler said, can we look at CMG Chipotle stock? So yeah, this is like a healthy restaurant right here. If you've never heard of Chipotle, and I think I figured out the reason why the stock has fallen so much. I think it's just the fact that they have a very high valuation and the growth is slowing. So if we go to even after this huge fall that they've had, they're still trading at 34 times net income. The industry average is 27. So they're trading at an above industry average net income multiple, 35 times net income. And, it's okay to have a high valuation if you're high growth, but check this out. The revenue, the lifeblood of the company, the sales are only up 3% year over year. That just barely beats inflation. So revenue's up by 3, but the net income is down by 4. So that means they also lost their margins. The margins fell 7% year over year. So all those kind of a combination of reasons why I think Chipotle has fallen so much. But still, they're printing money. They're making 300 to 400 mil of after-tax net income a quarter. I think they're worth looking into, but I wouldn't be surprised to see them fall a little bit lower. But Chipotle, actually, let me put them on my watch list. They kind of look like Kava. Kava's another stock that's been struggling like that. Yeah, they have pretty similar looking stock charts, as well as Sweet Green. Don't even touch this stock right here. Sweet Green's at all-time lows. So it's kind of the whole industry, not just them specifically. So, hey, what up? Someone said, wait, where was it? Brandon, what's up? He said Walmart, please. Yeah, Walmart stock. I love Chipotle. They're everywhere in Canada. Yeah, in California. Nice. So here's Walmart right here. Walmart is nearly at an all-time high. They have one of the best real estate portfolios out there. check this out. They're a grocery store, and even in a recession, people still got to go to a grocery store. People still need groceries. People still need paper towels or whatever. And check this out. The revenue's up 5% year over year. Not bad considering the law of large numbers. Like the revenue was 169 bill. Tough to grow that, but the revenue was was up 5%. They're making a good amount of net income. Basically, they had a slight one-time adjustment this quarter, but they're normally making basically 4 to 5 billion of after-tax net income a quarter. You get a 0.8% dividend yield, pretty nice yield. So Walmart's a stock that you just want to buy and never sell. Very resilient. Walmart and McDonald's were the best performing stocks in the 2008 recession. So pretty cool. VAL is due for a cyclical turnaround. Let's see. This is Valaris. Let's check it out. So this is a $3.7 billion company. Yikes, they're much lower than they were in 2009. I wonder what happened. Let's see what they do, though. I haven't heard of this stock before. What up, the crazy? We'll look at WLDS after this. Good to see you. So they sell floaters. I wonder what that is specifically. Jackups. I really don't know what that is either. Rowan Offshore Drilling. Okay, where's the revenue come from? So notice this, the US isn't on here. Brazil, United Kingdom, Gulf of Mexico, Australia, Angola. So they probably let's see the revenue. The revenue's up by 0.8%. They're making really good profits. They're making 100 to 150 million in net income a quarter. Technically, let me see what they do exactly. So oil and gas equipment, a provision of offshore contract drilling services. So for international drilling. So anyway, it looks like an oil and gas adjacent stock. Actually, the margin expansion there looked pretty good. So WLDS company. So this is wearable devices. Okay, so sorry, I'm drinking my water here. Looks like they've seen some crazy momentum the past couple of days here. To be honest with you, look, the stock went from 90 cents to it's $9 now at basically 10x. I need to know what that news is. Rises after 4 million share offering. Well, dang, how small is the company? Oh, yeah. So the whole entire company is only worth $21 million. You know what? I'm actually considering, there's this one extremely small market cap stock I'm looking at, and you would never, ever want to trust a lot of money in this kind of stock. But this is TLPH, Talfera, another really extremely risky company at all-time lows. But the reason I like this one is because Coremedics, CRMD, just took a $5 million stake. Yeah, Coremedics takes a $5 million stake. They own over 10% of the company. And I own Coremedics. So, hey, if my stock, Coremedics, CRMD, is taking a $5 million stake in that stock, maybe I should put $20 in it or something. Anyway, as much as I love this one, I would never, ever consider putting anything meaningful in that company. And WLDS, I wonder what that news is. If it really is the $5 million offering, I don't know. I'd be careful with that stock. They're only worth 20 mil. So user, what's up? He said, can we look at United Healthcare? Oh, and Darden Restaurants. Yeah, we'll look at Darden Restaurants as well. But yeah, United Healthcare, this is a stock that Warren Buffett just bought. If we go to Warren Buffett's newest position, go to new here. He bought 3 new stocks, United Healthcare, Lamar Advertising, and ALLE. And here's the thing, Warren Buffett doesn't just buy any random stock. Like if he's buying a company, he really does his due diligence. And that's why the stock rallied up so much. The stock gapped up on this day solely because it was disclosed that Warren Buffett bought the company. He actually bought United Healthcare at $320. It's $350 today. To be honest with you, I would be super careful with this one over $350. I mean, I wouldn't touch this one meaningfully until it's like $310 a share. Like that's or even under $300, because there is still a lot of future uncertainty here. Like if we go to the EPS right here, which is the net income, it's expected to collapse 50%. Like the EPS went from $5 it was $5 $3.90. It's expected to now be $1.70. That's actually more than a 50% decline. That $1.70 of EPS won't actually even be able to afford the dividend. So yeah, they have a 2.5% dividend yield now. Payout ratio says 52. But honestly, I think the worst is over for United Healthcare. The sentiment, at least, is, especially with Warren Buffett buying. What app is this? Yeah, hey, Joe Rowe, if you want to get this app, I'm on a brokerage right here. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's where you buy stocks. So anyway, let's look at Darden Restaurants and we'll pull up Caterpillar makes these huge diesel machines for data centers. And they make a lot of money servicing them. But here's Darden Restaurants. This app is telling me that there is a rounding bottom and the rise probability is a 95% chance. Well, anyway, that's technical analysis. As you know, I like doing financial analysis and looking at the stock's fundamentals. And check this out. If you're wondering what is Darden Restaurants, it's the parent company that owns Olive Garden. They own Longhorn Steakhouse and some other restaurants that it doesn't name out. But yeah, apparently Olive Garden and Longhorn Steakhouse is making a lot of money, basically 200 to 300 million of after-tax net income a quarter. The revenue is up 10% year over year. You know, for a restaurant in this environment right now, that's actually pretty good. Revenue is up 10. Profits were up 8. So they did lose their margins a little bit. Yeah. But anyway, they're a cool dividend growth company. You get a 2.6% dividend yield with Olive Garden stock. What's the multiple? They're trading at 24 times net income. The industry average is 27. That's a much lower valuation than Chipotle. So yeah, that's a surprising good stock chart for Olive Garden. All right, so I was looking at UNH. Maybe I'll wait for a dip. Yeah, I'd wait for, not financial advice. I'd definitely wait for a dip on United Healthcare to like deploy money meaningfully in that company. So let's look at Caterpillar. Oh, hey, it's Will. Yeah, good evening. Yo, I hope y'all are having a great Sunday. Appreciate y'all being here. By the way, if you want to hit the follow button, we go live every single Sunday at this exact same time. So here's Caterpillar right here. I believe this stock has the potential to keep on climbing higher. If you go to the dividend right here, they have a 1.3% dividend yield. Look at the payout ratio. The payout ratio is only at 25%, so they actually have a lot of room to raise their dividend in the future. And look at the multiple as well. They're trading at 21 times net income. I really feel like it could stretch up to like a 24, maybe 25 PE, send the stock to over $500 before it really maxes out. So yeah, they're in energy and transportation. They help out the construction industry, resource industry, financial products segment. It's not. It's over $1 billion of revenue a quarter for them. But yeah, they're making 2 to 3 billion of after-tax net income a quarter. So yeah, I really like Caterpillar, a great dividend growth stock, I think. So someone said, oh, Liam, what's up, dude? In Coreweave, actually, let me look at Coreweave. Then we'll pull up SoFi Technologies. You know, I love SoFi. I do own them. But yeah, let's pull up Coreweave right here. Coreweave is in the NVIDIA portfolio. And legit 85% of NVIDIA's portfolio is just in Coreweave stock. And there's some good news and bad news about this company. Here's the good news. I love the fact that Coreweave is extremely growthy. Check out the revenue. It literally went from 400 mil to 1.2 billion, a 3x increase year over year. But here's the bad news. They're burning through a lot of net income. They're losing a couple $100 million in net income a quarter. But here's the thing. It's kind of okay because of how growthy they are. They had a record 1.2 billion of revenue this quarter. The analysts are expecting it to just continue to hit a new record, 1.8 billion in 2 quarters. So I like Coreweave for the growth. I like them because NVIDIA owns them, but I don't like them because of those crazy net income losses. We want to see those really start to narrow. But again, they could be one-time IPO fees. I know they did just IPO, but EPS expectations are expected to continue to lose some money for a while. So here's SoFi Technologies. This is a company I do own, by the way. Actually, let me show you that. Why not? Be transparent. How are they doing in the overnight market too? So SoFi is up 0.8%. I do own 24 shares of them. I regret every share I've ever sold of SoFi. I only have 24 shares left, but man, they've been even my high expectations. Like, check this out right here. They're a fintech. They have their own banking charter. If we go to their financial services business, it is up 105% year over year. Incredible growth. It's at a record. So it's up 105% year over year after going 80, after going 222. Like, the growth just continues on their financial services business. And also the lending side of the business is also at a record. It's up 30% year over year, also to a new record. So both businesses are increasing. If we go to the combined revenue, the revenue is up 42% year over year. They did 850 million of revenue. Out of this 850 million of revenue, 100 million of it was after-tax net income. So I really think people are just starting to take SoFi serious. They're making net income every quarter. They're really growthy. So, they're beating analyst expectations. Analysts expected 804 million of revenue. They reported 858. That's a significant increase. So, uh, yeah, that's why they deserve to, be $25 plus. I wouldn't probably touch them at this price. The valuation looks a little high now, but yeah. All right. So, ooh, Carter said Weeble stock. You know what? Let's pull up Weeble. Yeah. Ooh, so this is like a Robinhood competitor. And hey, here's my Weeble account right here. I've probably given Weeble stock a lot of transaction fees. I've had my account for a long time. But yeah, let's go look at their financials right here. I like that the growth is good. Like, if we look at the revenue, it's up 46% year over year. So that's some pretty good growth. They are still struggling with net income positivity. Like, they lost net income this quarter, but made net income the past 2 quarters. But yeah, one thing, good news for this stock is they just released crypto back onto the app, and crypto transaction fees, like Robinhood, is their highest margin business. So Webull could potentially make a lot of money in the future from crypto trading. So that could be a huge earnings tailwind for them. What app are you using? Yeah, hey Kayla, I'm on a brokerage right here, so it's where you buy stocks and stuff. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. But yeah, let's look at this. Is my favorite app right here. Lowest fee brokerage. It's free. I keep my idle cash in here just because it earns interest. A lot of people like this app just for that feature right there, earning the daily interest on your idle cash. So anyway, let's look at this next stock right here. Ooh, MST. Let me look up MSTR. Then we'll look at food too. So MicroStrategy right here. Again, this is just Bitcoin. It's basically just a Bitcoin proxy. Wait, what does this say right here? Michael Saylor's Bitcoin only prophecy not aging well. I don't know. And oh yeah, I guess Ethereum is pretty booming right now. But check this out right here. Basically, you look at this company's balance sheet, their assets, because all these assets that they own is their Bitcoin. And if you're wondering, how did their basically assets go from 8 billion to 64 billion in a year? Well, that's because they have been diluting you. They issue a bunch of shares. They issued 19 billion of shares this 1 quarter, and they bought Bitcoin with it, and that Bitcoin appreciated a bunch. They issued 7 billion of stock this quarter and bought more Bitcoin with it. So anyway, it's just like a Bitcoin play. It's kind of boring. That's kind of a boring answer. I apologize. Do you have a Discord or app where you post everything you do? No. Yeah. Hey, user, watch out for people impersonating me. I sell nothing. I have no course, book, WhatsApp. I'll never follow you, DM you. I don't sell anything. So anyway, yeah. Would you say you're a swing trader or how? Yeah, actually, I would consider myself basically a long-term investor. Like I rarely, like if anything, I swing trade, but I really don't even swing trade that often. Like I mainly just buy and hold great companies for the long run, and then I'll trim them a little bit, but I'll never fully sell out of my position. And I regret doing that for some positions. I regret every share I've ever sold on Robinhood. I'm up 700% on them, like SoFi as well. I only have $600 left in them, so I wish I kept my original shares, but yeah. Do you have a meme coin? Nah, I don't. I don't own. By the way, I own no crypto. I have no crypto whatsoever. But yeah, here's Moom. Yeah, this app. By the way, this brokerage I'm on right now, this app that I'm on, here is them publicly traded. So it's cool. Yeah. By the way, even if this app that I'm on right here, this brokerage went bankrupt, you're still FDIC insured for $250,000, so you wouldn't lose any money. But it's also just a good sign to see that the app that I'm on is doing great financially. They made 330 million in net income this quarter. Like this is the crazy part. The revenue's up 69% and the net income's up 111. So that means they're expanding margins. They legit have 50% net margins. The brokerages print money. Same with Robinhood, same with Interactive Brokers. They have crazy high margins. They collect brokerage commissions, interest income. The interest income revenue is booming. And also right here, if we go to their other income, this is their crypto transaction fees. And it just started blowing up. It's up 175% year over year. So Futu, in my opinion, is a great buy and never sell stock. You also get a nice yield. Well, potentially. They do a special dividend every now and then, every December, every Christmas time. So anyway, Futu's cool. Do you think can we look at the trade desk, please? Yeah, let's look at the trade desk. Yeah, Bitfarms. Yeah, they're a Bitcoin mining company. I don't have much thoughts on them. You just trade them off their Bitcoin value, really. But here's the trade desk right here. This is actually a TV advertising company, and unfortunately, I think this stock might go a little bit lower because they still have a pretty high valuation. Like even after this huge dip that they've had, they're still trading at 54 times net income. But even crazier, before today, they were trading at over 100 times net income. So it's probably good. Oops. So I honestly think this net income multiple, this PE might go a little lower. So yeah, if we go right here, the revenue's up 18%. So the revenue's up 18, but the net income is only up by 6%. So that means the net margin fell by basically 11% year over year. That's not great. So kind of slowing growth, but still they're making a lot of net income every quarter. They also just lost Netflix as a partner. Netflix used to use the trade desk to find all their ads. Now they go with Amazon. So yeah, I think they're worth looking into, but I think they might go a little lower. Is the Discord in your bio old? Oh, hey, actually, so user, yeah, hey, I technically do have a Discord, but it's just to ask me personal questions. So I do have a Discord. It's in the link tree in my bio. It's not. It cost $1 to join. Literally, I made it the lowest price possible, $1, because I made a Discord before it was free and legit. You wouldn't believe how many bots. It was such a small Discord, but it still had a ton of bots. So anyway, all right. So. Sup, Nathan? Hey, what up, German? Good to see you, man. Yeah, hope you're having a great Sunday. And Easy You, hope you're having a great Sunday as well. Yeah, there's some funny emojis here. So anyway, let's see here. You know what? Oh, what up? Let's look at Lululemon right here. Yeah, Lululemon has not done too well, unfortunately. So it's because they just reported earnings, and on their earnings report, they lowered their guidance. They basically said they're seeing increased input cost from inflation and tariffs. And also their North America sales division, North America, the sales were only up 1%. So that's not great. The revenue is only up 1% year over year. So that's not too good. If we go to their comparable sales, yeah, it was only up 1% year over year. But their international sales, everywhere else except the US, was up by 25%. So when we kind of blend those together, the total revenue was up by 6.5. Revenue is up 6.5. Net income fell by 5.6%. So their margin did fall, and the margins are expected to kind of continue to fall with their input costs are going to hurt them. So Lululemon's in a tough spot right now. They're still making a boatload of money, 300 to 400 mil in net income a quarter. And what is Lululemon doing with 300 to 400 mil a quarter? Well, they're actually spending it all on share buybacks. But unfortunately, these are all poorly timed because they spent before today 300 to 400 million a quarter on share buybacks. It could have bought them 25 to 40% more shares if only they had waited. Yeah, and the quality of their product has gone down too. I've seen people notice. So I think they could potentially even go low. I'd be careful with Lululemon. Yeah, I wouldn't have them as a huge position. So, oh wait, someone said, or Looney said, what's the stock that gives you the most dividends? So my highest yielding dividend stock, I believe, it doesn't give me the most amount of dividends in terms of total dollars, but My highest yielding stock is Main Street Capital. They have a 6% dividend and they actually pay monthly. They're one of the few companies that actually pay monthly dividends. So, yeah, Main Street Capital is pretty cool. A 6% plus dividend yield. Another very high yield stock I own is T Rowe Price Group, ticker symbol TROW. They have a 4.8% dividend yield. The T Rowe is a pretty cool one because they trade at 11 times net income. They have no debt at all. They're making a 500 mil of net income a quarter. Dividend only costs 250 mil. Lots of room to raise the dividend. They're doing share buybacks, so pretty cool. All right, so what up, Germany says, what's your opinion on GCT? Let's check it out. Wait, yo, what up, Sheezy said, can we look at NUE? Yeah, remind me to look at NUE after this. Sorry, I didn't see that one. All right, so Giga Cloud Technology. This is just over $1 billion company. So this is a $1 billion market cap stock. Let's go look at their financials right here because that's what I like to look at. Dude Vale. Hey, what up, Scene? Yeah, hey, we'll try and get to that stock right there. So anyway, Giga Cloud Technologies. I think my phone just disconnected from the screen. Well, that's not good. Hey, by the way, I'll quickly say if you want to hit the follow button, we go live every single day, twice a day. Also, we stream every Sunday at this exact same time. So if you're free every Sunday, you can hit the follow button. All right, so, okay, I'm trying to reconnect my phone here, and it is not reconnecting. Okay, there we go. We're back. Sorry about that. So here's what GCT does. Let me go see how the revenue is doing. So the revenue is only up by 3% year over year. So the revenue is up by 3.7. And actually, great news. They're net income positive. They're making 30 to 40 million in net income a quarter. So that's what I really like. The fact that they're net income positive. So here's what they do. They're an off-platform e-commerce Giga Cloud last mile delivery service. Maybe they're like an Uber competitor, warehouse service, ocean transportation. So they're in a lot of industries. Pretty cool. Anyway, they're making, I like that they're making net income every quarter. I wouldn't want to see more growth. It looks like the sales were only up 3% year over year, but overall it looks pretty solid. All right, so let's see NUE stock, NUE or Nucor. Oh, hey, we already covered this stock earlier. Okay, so yeah, I'll be super quick. This is the steel company, and basically what my thoughts were, out of all the steel companies out there, this is one of the better ones because I've looked at all the other American steel stocks. They're losing a bunch of money right now, but this one, the net income has certainly declined a bunch. They used to make, 1 to 2 billion a quarter. Now it's under $1 billion every quarter. So the net income certainly declined, but it's still a lot of money. A couple $100 million of after-tax net income a quarter. So that's probably one of the better steel plays. Get a 1.55% dividend too. So yeah, that's a steel play. It's a commodity. So UPS stock, yeah. Or wait, let me look at Vale first, then we'll get to UPS. So this is Vale SA. So South America. This is probably an oil and gas stock. And so unfortunately, if we look at this stock, they're the exact same prices they were in 2017. So you bought the stock in 2017, you're down on your position. But yeah, you get a crazy yield, a 7.8% dividend yield with this company. Let's see if it's sustainable. Oh, actually, so they're not an oil and gas stock. They're actually an iron ore solutions. So they sell a commodity though. So the revenue is down 11% year over year. So do beware, revenue is negative 11%. And yikes, the net income is down by 24%. Luckily, they're still making a lot of money, basically $2 billion a quarter. But I don't like the trend of the business. So that might be why the stock is struggling for a while. Again, they just sell a commodity. I wouldn't really expect the stock to outperform the S&P 500 in the long run. But still looks like they're... Again, the business is declining, but that's a way to get exposure to iron ore. Pretty interesting. So here's UPS right here. This is another very high yielding stock. And to be honest with you, I think that their dividend is at risk. I will show you this. So check this out right here. If we go to their dividend, they have a 7.75% dividend yield. Here's how you can tell for yourself if a dividend is safe. Also, their average daily parcel volume is down by 6% year over year. But check this out. Here was their net income the most recent quarter. They made $1.28 billion in net income this quarter. A little less. It was a little less last quarter, but they made $1.28 billion. but the dividend cost 1.35 billion. So they couldn't even afford the dividend this quarter. So yeah, they made 1.3 billion net income, but they didn't retain any of it because over 100% of it had to be payout in a dividend. So that's why I think unless things change quick, the dividend is really unsustainable right now. And I would really, to be comfortable with the high yielding stock like that, I want to see them making a lot more net income than the cost of the dividend. The business isn't really growing, or it's negative 2.7% year over year. So honestly, I can understand why the stock has not done too well. Maybe it's all priced in though, but I wouldn't put a lot of money in that one, expecting the dividend to be safe. So FWONA, let's see. Oh, Liberty Formula One. So yeah, did y'all know Formula One is publicly traded? They're not an American company, but the stock has done incredible. Also, Warren Buffett owns some of this stock. So yeah, Formula One. Do they make net and do they make profits? That's a great question to ask. So they do. I mean, if you average out the 4 quarters here, they technically are making net income every quarter. Too many employees for UPS to give up. Oh yeah, what up, Sean? So yeah. Um yeah, so here's Formula One, and Warren Buffett also does own this stock. I wonder if it'll show him in the top shareholders. Nope, he's not in the top shareholders, but yeah. If we go to Warren Buffett's holdings right here, we can check his exact holdings, and he owns, where is it? What percent of his portfolio? It's a really small position. Oh, maybe I was thinking of Liberty Live. Man, I could have sworn oh, there it is. FWONK. Of Liberty One Formula is 0.10% of his portfolio. Pretty interesting. All right, so let's see here. UPS and FedEx have laid off massively before the holiday season. This smells like a recession/depression. Hey, that's interesting. Hey, thanks for that, German. I didn't know that. Um, yeah. Or maybe they're just being taken over by Amazon. I don't know. What are good companies for day trading? Hey, I don't really know because I don't day trade. If anything, I swing trade, but things that are high liquid, maybe like, I don't know, Nvidia or something. I don't know. Okay. Do you have any IPOs, valuable metals, gold, silver? I really don't. I don't know any IPOs really that are doing that. There was one IPO someone told me about. Oh yeah, Pattern Group. This is they said they help out. Yeah, if you look right here, a TikTok shop. I don't know, something like that. Pattern Group. Anyway, interesting. So what do you think about quantum computing companies? To be honest with you, I haven't found any quantum computing companies that I like. Like Qubits isn't great, or they're extremely overvalued. I wouldn't buy Qubits, I wouldn't buy IONQ, I wouldn't buy Riggedy Computing. To be honest with you, I just pick I'd pick either Honeywell, IBM, or Google. These are the industry leaders right here. Like Google, let me cover Google real quick. I mean, this company deserves to be at an all-time high. Obviously, Google isn't a pure play for quantum, but they have the money and the talent to be the industry leader. And here's also why I think Google might even continue to climb higher, even though they're at an all-time high right now. Because right now they're trading at 25 times PE, or 25 times net income. I feel like that could stretch up to like a 28 PE. It's a Mag 7 company. It's Google. Check this out. The revenue is up 13%. Revenue's up 13, but net income is up by 19. That means they're expanding margins. A $3 trillion company with 30% margins. They're legit doing 25 to 30 billion in net income a quarter. And what is Google doing with 25 to 30 billion in net income a quarter? Well, they're legit spending most of this money on share buybacks, because remember, Google's too big. Regulators wouldn't allow them to just buy a business. So they just spend all their money just buying back their own stock. And they also just started paying a dividend now too. You now get a dividend with Google. So anyway, for all those reasons, I think in AI, Google was just seen as an AI loser, but now they're seen as an AI beneficiary. So anyway, Google Gemini is like the best LLM out there, I'm pretty sure, by the tests go. And I use Google Gemini. They have this really cool like AI audio podcast, like way you can learn information. I love it. All right. So is Toast good to invest in? Hey, funny you say that, Tab. I actually own some Toast stock. Here, I'll show you that real quick. So if I go over here, I own 15 shares of this company. It's down here. See, I got 15 shares of Toast stock. This is a restaurant point of sales payment processor. Like, if you ever seen those little tablets that are like, hey, would you like to leave a 20, 30, or 50% tip? Well, this is most likely the company that owns that software. Check out, I love how growthy they are. I do own them, so I might be biased, but check this out. Revenue's up 25% after growing 26, after growing 37, after growing 58. Like the revenue just continues to hit a record every quarter. And it's not just the revenue that's growing, but also the profits, the after-tax net income. They made 90 mil in net income this quarter. I mean, they're making net income every quarter, and it's growing ridiculously quick. They also have a really good balance sheet, deleveraging. Liability ratio went from 40 to 34. So anyway, if free cash flow is ridiculous too. Free cash flow is up 92%, 200 mil. So anyway, Toast looks pretty good. All right, so if they don't buy the shares, no one will. Hey, I forgot what we were talking about right there. So yeah, RGTI is part of a fund, so in my opinion, they're more solid. I do hold qubits because they're moving. Yeah, hey, qubits, some of these quantum stocks, they're mainly a like momentum trading vehicle right now. You buy them for the momentum, because they're so volatile right now. So anyway, let's look at Riggedy Computing right here. What's their short volume? I am curious as well on that. Wow, okay, actually it has gone down a little bit, but 16% of all the shares are being shorted on Riggedy Computing, and maybe there was a little short squeeze because they were up 15%. But yeah, let's see. How is the revenue here? So this is kind of the tough part. Again, here's the honest truth. I mean, this is a $6.2 billion company, a $6 billion company that did $1 million of revenue, down 41%. Like I can tell you so many significantly better financially companies that are worth way less than $6 billion. So again, I'm just judging them off their financials. Like, they're losing 20 mil in net income a quarter. The revenues declined 41%. So again, it's the future growth here, but I'd be really careful with Riggedy Computing. It's like a, company to just buy and hold shares of to trust forever. So yeah. Hopefully that was helpful. What's up? So, oh wait, what is this one? QSI, Quantum SIO. Here's another quantum play. So let me check this one out. This one's worth $230 million. Did they have sales? So they had sales of 500,000, down 5%. Dang, so they lost. That's 10% of the entire business. Like they lost 28 million of net income just this quarter. That's pretty significant when your whole company's worth 238 mil. That's over 10% of the entire business. So that's why, in my opinion, you can't trust, a lot of money in these names. You can't trust any money, in my opinion, but I would, especially with that one. Out of all the quantum names, I do like IONQ. I believe this is a quantum name. They are a quantum name. They also just acquired a business for $1 billion. So IONQ completes Oxford Ionics acquisition after UK approves it. That's great news. $1 billion acquisition is pretty meaningful when you're worth 16 bill. I will say this company should not be worth $16 billion. But Amazon owns like 100 million of the company. And I do own Amazon stock. So, hey, there's my exposure. I read Radio This Market. You're about to see nothing. Price of gold. Oh, hey, we can look at gold right here. If the price of gold, is ticker symbol IAU. This is the digital price of gold. And in ETFs, you can like get in and out of it. This is arguably almost for surely better than buying physical gold in terms of like the fees you'll save, and it's more liquid and you can get in and out and you can even do options on gold. So anyway, gold's literally at an all-time high right now. So if you got any gold chains, gold jewelry or something, maybe go hit up the pawn shop and sell it if you don't care about it. You'll get the most money for it than you've, ever could in terms of dollars. Again, none of this is financial advice. I'm not an expert. So let's see here. Adobe stock. AB, what's up? He said Adobe. Let's see here. Adobe, this is that software company. A lot of software names have been hit. Like you look at Salesforce, Adobe, they haven't been doing too well. And it's because of the AI thesis. In 10 years from now, where will Adobe be? Will we need Photoshop? I know someone that just made a great logo with ChatGPT. And but I honestly think they've overpriced or they've overdone the sell off in Adobe. I think humans are always going to need the final touch on art and stuff. But but that's why the stock's been hurt so much because AI could replace it. But for right now, the business is booming. The revenue's up 10% year over year. Revenue's growing double digits. Revenue's up 10%. They're making a bunch of net income, 1.7, 1.8 billion of net income a quarter. They're making a lot of free cash flow, over 2 bill of free cash flow a quarter. What is Adobe doing with all this leftover money? Because they don't pay a dividend or anything. So what is Adobe doing with these billions of dollars extra? Well, they're legit spending it all on share buybacks. I love this. They legit spent 3.5 billion just this quarter on share buybacks, 3 billion, 2.5 billion. So here's what that does for you as a shareholder. The net income is up 7.5%, but the net income per share is up by 12.9. So yeah, I think honestly, this should probably be closer to $400 to $500. I think market will slowly as on price, like the market will start seeing this as an AI winner more than an AI loser. As market starts to realize, humans will always need that final touch on humans will always need that final touch on art. So yeah. Um hey. Oh, all right. So let's see here. Um yeah, I'm surprised Adobe isn't doing better. Yeah, me too. You look at Salesforce as well. A lot of these, stocks that people think AI is going to replace have been getting hurt bad. They thought that about Google as well. They thought Google was going to be an AI loser, but then Google implemented AI right into the Google search. Like if you Google anything, like it has like an AI overview, and it gives like a little like LLM answer. So Google's now an AI winner, and Google doesn't have to sell off Chrome anymore, which is pretty good. So that was great news. User said I joined the Discord. Hey, user, thanks so much for joining the Discord, dude. If you got any questions for me, I'll be very happy to personally answer those for you. So yeah, we'll look at a couple more stocks here. Then I do gotta go. Appreciate y'all being here. By the way, if you want to hit the follow button, we stream every Sunday this exact same time. So here's BBAI, Big Bear AI Holdings. So honestly, I wouldn't buy this stock. Like if you look at the top right, this is a $1.8 billion company. Here's why it's tough paying that. Like they're a $1.8 billion company and they lost 200 million in net income just this quarter. So they lost over 10% of the entire company just in net income this quarter. And they lost all that money all for a business that the revenue declined by 19% year over year. So the business unfortunately lost its growth. Revenues down 19% year over year. They lost 200 mil in net income. And that's just this quarter. They lost 70 mil, another 150 mil. So those net income losses honestly scare me for Big Bear AI. And they're not really growing the revenue. So to be honest with you, I don't see why investors I'd be really careful with that one at their current market cap. So yeah. Oh, Meta. You know what? Yeah, we'll end it off with Meta stock. I do own them. And hey, thanks again, Ranger John, for the rose. I really appreciate you, Ranger John. So here's Meta Platforms right here. Mag 7 stock, a $1.9 trillion company. And I think they're going to continue to go up. I mean, they're trading at 27 times PE. I really feel like they could go up closer to like a 30 PE. Check out this active users. I hope this is real and this isn't like AI bots, but it says their daily active users is 3.48 billion. That's half the world. And China doesn't have access to Meta apps. So it's really more than half the world is on a Meta app once a day. Seems pretty crazy. But the numbers don't lie. The numbers are incredible. If we look at the revenue, the revenue's up 21% year over year. And if we look at the net income is up 36% year over year. So that means they're expanding margins. The margins grew 12% year over year. So yeah, Meta also, you get a nice dividend. You get a 0.3% yield. They're also doing some share buybacks. So Meta's pretty interesting. All right, all right, Joshy, all right, he said, please, I'll check it out for you. He said, can we look at BCE stock? I'll check it out. So BCE, this company has not done too well, but let's go look at their financials. Usually if you look at the financials of a company, it usually explains why a stock is either doing really good or really bad. So they're a $23 billion company. They're actually a Canadian company. So we're going to convert the revenue from Canadian to USD. And let's see, Bell Communication Technology and Service. So unfortunately, their main revenue stream is actually down 8% year over year. So that might explain why the stock hasn't done too well. Let me just go to the revenue down here. So the revenue is up by 2.28% year over year. So maybe their other business, I don't know what happened. Let's see. So the revenue is up 2.28. The profits are down by 1.9. So they're really making like well, it says only 500 mil, so they must have some expenses. Yeah, that's weird. How is the operating profit $1 billion, but the net income only 470 mil? Anyway, that's not too bad. I mean, a 10% dividend yield. Yeah, let me see how much the dividend costs. That could actually end up not being too well. So let's just say they make 500 mil of net income a quarter. I'm really giving them the benefit of the doubt here because they haven't made 500 million a single quarter in basically in 2 years, but let's just say they make 500 million in net income a quarter. Let's go see how much the dividend cost exactly. You can see that by going to the cash flow statement. And you scroll down here, and the dividend cost exactly 474 million a quarter. So they at very least need to make 475 million a quarter. They can just barely afford the dividend. So I'd be very careful with that one. For them to sustain that dividend. Nazran said, what app is this? Yeah, hey, by the way, I'm on a brokerage right here. It's where you buy stocks. If you want to get this app up on, it's in the link tree in my bio. It's the very first link there. Yeah, they just did a new thing where you can track all these super investor portfolios like Nancy Pelosi. This isn't like exclusive information here because, they have to make all their trades public by SEC law, but they kind of show you their exact holdings by weighting and everything. And you can batch trade, like follow them into their portfolio. So, hey, if you're like, hey, I don't know what to do, maybe go check out what the super investors are doing. Nancy Pelosi, Warren Buffett as well. Warren Buffett, he just bought a bunch of new companies. Like he just bought United Healthcare, Lamar Advertising. So yeah, anyway, pretty cool new feature. Best part about this app, what a lot of people like to do is just keep their idle cash in here. That's what I do. It earns you daily interest. So yeah, my $1,000 of cash earns you 11 cents of daily interest. So anyway, if you want to get this app, it's in the link tree in my bio, the very first link there. It is an affiliate link, full disclosure. So we'll both get a little fractional share of NVIDIA. So it helped me out. But anyway, I hope you have a great rest of your Sunday. I'll see you guys very soon. And hey, YouTube agent, what's up, dude? I own VOOQQM. That's great, dude. Oh, dang. Okay. James, if you're still here, all right. We'll look at these last two here. Thanks for staying till the end of the stream. You know what? We'll still cover these. So KALV stock. What up, James? Thanks for showing up to the YouTube stream. Because you commented on the YouTube stream, I'll check it out. By the way, if y'all want to support me, if anyone's still here on the TikTok stream, best way to support me is to subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But you can just type in YouTube Nathan Robert. I'm streaming on there as well. If you miss anything, you can replay it. But yeah, TikTok keeps randomly taking down my streams. So anyway, check out this. Here's what I don't love about this stock, to be honest with you. If you look at the revenue, it's only $1 million this quarter. So they did $1 million of revenue, and they lost $60 million in net income. They're losing over $200 million in net income a year, and the whole company's only worth $700 million. So that's really scary. So they're losing $200 million a year. They're only worth $700 million, and they only have like a couple million of sales a quarter. Yeah, that one looks really risky, to be honest with you. TT is a good tech company. Yeah, I love Train Technologies. At my college, there's a huge Train Technologies like I was about to say reactor. It's like an HVAC system. So anyway, check this out right here. They're trading at 31 times net income. They probably deserve that valuation just because they're so quality. Like if we look at the revenue is up 8% year over year. The net income is up by 15% year over year. So they're expanding their margins, which is great news. Net margins grew 6% year over year. Did you change your TikTok? Because your account stocks live? Yeah, that is my account. You are cool. Thanks for mentioning that. Yeah, by the way, thanks for showing up to the YouTube stream. TikTok took down my main account's live access, so I can't stream on my main TikTok account for 3 days. So that's why I'm streaming on my second TikTok account, which is Stocks Live. So yeah, for everyone on the TikTok stream, I do appreciate y'all. But best way to support me is head over to the YouTube stream. I'm scared TikTok will ban this account too. So yeah. Yeah, they took down my main account, which is unfortunate. So anyway, can you look at what up, Kenneth? He says ADUR. It's a cool recycling company. Hey, what's the ticker symbol for Akinter? What's Akinter? I don't know what that is. So anyway, Audro Cleaning Technology. So they're a very small market cap. Yeah, they're worth $400 million. So they're a $400 million market cap. They're a Canadian company, so we're going to convert the revenue into USD. So developing environmentally responsible technology, converting into life plastics and tire. Okay, so all the revenue comes from Canada. They're a 400 mil company, so I don't expect the best financials here. So yeah, the revenue is only 55,000 on this company. So do beware. I'd like to see more sales. The sales are just tiny. Only 50,000 of revenue, and the revenue fell by 30% year over year. They're losing a couple mil a quarter. They're barely losing any money. So yeah, they're interesting. They just IPO'd, so just to wait a few more quarters. So, can you do MOD before you go? Yeah, let's do MOD. Oh, and then we'll do ACN stock. Yeah, we'll do ACN. Don't worry, I got you. Thanks for always showing up here. Or what's up, Bishnu? What's up? Yeah, we'll check out Akinter. So, I don't trust it at all. Yeah. So MOD stock. This is Modine Manufacturing. They're like it must be I think they're like a manufacturer and a servicing company. So the stock is pretty much at all-time highs. So first off, congrats if you own this company. Yeah, Climate Solutions. So they do HVACs, heating, ventilation, air conditioning, performance technologies. Let's see how the revenue is doing. So the revenue is up by 3% year over year, and the net income is up by 8% year over year. So they did grow their margins a bit. They're making 40 to 50 million of after-tax net income a quarter. That's pretty good. MOD. So they're an HVAC company. I love that. They're actually a competitor to Comfort Systems, FIX. The two stocks look pretty similar. Edelson, what app you? Yeah, hey, if you want to get this app I'm on, again, I'm on a broker. You buy stocks on here. If you want to get this app I'm on, it's in the link tree in my bio. It's the very first link there if you want to get it. So yeah, that's Modine yeah. So AC in stock. Let's do it. So architecture, whatever. Man, I can't pronounce that word for some reason. Akinter. Okay, so anyway, they're a massive company, $150 billion company. The stock has been struggling though. I wonder why they've been on such a downtrend. Let's go look at their financials and see if we can figure out why. Because usually the financials explain it. Yo, Matt, we actually covered BBAI right before you said it. And I don't have really anything to good say about that stock, but you know what? I'll cover them too. But yeah, here's ACN. The revenue's up 7%. Did that meet the expectations? So they beat on revenue, they beat on net income, and they beat on EBITDA. So they had a triple beat quarter, but the stock fell nonetheless. Yeah, they're making 1 to 2 billion in net income a quarter. That's incredible net income. So I wonder, yeah, dude, I wonder why the stock has fallen so much. Maybe it's like they gave bad guidance. We have seen that recently. Architecture acquires Canadian IAM firm, IAM Concepts. Hey, they just acquired a business. That'll bring some growth. Pretty interesting. So, all right, German, what's up? Yeah, I don't care. Let's do it. IWMI. Yeah, thanks for always showing up here. So this is the Russell 2000 high income ETF. So yeah, this sells covered calls on the Russell 2000. One thing I will say about the Russell 2000 is a lot of those companies are zombie companies where they can't even pay the interest on their debt. So um, I wouldn't touch a lot of companies in the IWM. But anyway, this is a unique asset to sell cover call. You're basically buying this to maximize your dividend income. You get a 15% dividend yield, and the dividend is paid monthly. So yeah, honestly, the IWM is probably better to sell calls on than like the S&P 500. Actually, yeah, honestly, that's a unique one to sell calls on. I actually like that one. IWMI. Accenture. Oh, okay. I have DocuSign as well. Yeah, hey, DocuSign's been, well, they've honestly been disappointing the past couple weeks here. But yeah, I bought DocuSign a long time ago. It's one of the first stocks I bought in here. But yeah, DocuSign, they might get acquired. Dude, Adobe should acquire them. Part of ACN business is government contracting. Lost a lot due to the uh, government efficiency, DOGE. Yo, hey, thanks for that. That might explain why the stock has been on that downtrend so much. That makes sense, actually. So yeah, you know what? I did say I'll cover BBAI. I'll be really quick about this right here. Um, or oh, actually, here's the thing. I'll be super quick, rapid fire. They're a $1.8 billion company. Like, think about this logically. They're a $1.8 billion company, and the business lost 230 million in net income. That's over 10% of the entire business they lost in net income this quarter. Last quarter, it was 62 mil, then another 150 mil. Like, the net income losses are scary, and they lost all this money all for a business that declined 20% year over year. You know, the sales are negative 20%. So nothing's really blown me away at BBAI. They're losing a lot of money. The sales are negative year over year. So yeah. FORT is also interesting. Is that are you talking about Fortinet, or are you talking about Fort Technologies? They're Canadian stock. They're only worth 30 million. I think you're talking about Fortinet. And Fortinet is an amazing cybersecurity stock. And honestly, you know what? This is a stock. I feel bad, Matt. I'm so sorry, Matt. I don't like Lucid either. I'm not trying to bag on anyone's stock, of course, and I feel bad if you own Lucid, because if you've made money on Lucid, I'm very impressed. But yeah, Lucid, here's why I wouldn't touch, even though the stock's at an all-time low and it's like, hey, maybe it'll do a little RSI retrace oversold. I wouldn't touch Lucid. Here's why. Again, they're a $6 billion company, and the business is burning through money. They lost 550 mil this quarter, 400 mil, 400 mil, a billion. Like, just literally since their existence, they just burn through net income, and they're nowhere near close to profitability either. So it's just tough. Like, they have real bankruptcy risk. And since, they're losing all this net income, they've been having to dilute you as a shareholder while the stock's at all-time lows. They've leveraged up their balance sheet by 20% year over year. Like, Lucid is unfortunately not in a great position. Luke said UNP. Oh, Union Pacific. This is one of the railroad stocks, basically shared oligopoly for the railroad industry. You can't get any new railroads. It's federally regulated. They're so important for the U.S., economy that you get a 2.5% dividend yield, very safe payout ratio. They do share buybacks as well. So yeah, Union Pacific they're kind of boring. I don't really expect Union Pacific to outperform the S&P 500 in the long run, but they're still pretty cool. All right, so Robert said TEM, thanks. All right, last stock here, Tempest AI. This is a company owned by Nancy Pelosi and her husband. And what's this news right here? Tempest AI surges over 13% as FDA approves cardiac imaging technology. Pretty interesting. Well, anyway, check this out right here. They're in the genomics industry, and check out how growthy this. Check out how growthy this is. I can't believe it. I mean, the revenue's up 115% year over year. That's incredible, literally to a new record. And not just their genomics business, but their data and services revenue also at a new record, up 35% year over year. So they are still losing net income every quarter, but it's all right because of how growthy the sales are. I mean, 90% sales growth is absolutely nuts. So anyway, Tempest AI is great. So anyway, I hope you guys have a great rest of your Sunday. Dang, I got to get up at 5:30 a.m. tomorrow for college, so that should be fun. Anyway, I'm going basically straight to bed after this. I'm so tired. But hey, if y'all want to hit the follow button, we go live every Sunday at this exact same time. We actually just stream every single day. So you went to follow button, we stream every single day. I sell nothing. I have no course book, WhatsApp. Watch out for people impersonating me. But have a great rest of your Sunday. And thank you to everyone on the YouTube stream. I can't believe TikTok took down our stream. So to everyone on the YouTube stream, you're a real one. I appreciate you. Have a great rest of your Sunday. Robert, Beatrice, German, Bishnu, Luke, Matt, have a great. Hey, Brandon.